communities in Papua New Guinea. So we have invited a cross section of eminent personalities who are quite experienced in the digital financial space for us to discuss about the possibilities of expanding digital financial services in Papua New Guinea. So we welcome all of you, and I'm quite pleased to introduce Roberta Mollin from Bank South Pacific, who is going to be the moderator for the day. And Roberta, I hand over to you.
Thank you very much, Sonia. And just to hear everyone can meet, please. We'll start just to go through a few housekeeping and show you on silence. So we'll start by just looking at, just in addition to what Sarah has spoken about, as the moderator for today, I'd like to just highlight a few things about digital financial services that the citizens of the Guinea to be able to access to financial services. So as we know, at the bottom of the pyramid, we need to be able to access digital financial services within ease of things that happen. And in areas where we can reach expenses, this is the time for all really to come together to share their experience and contribute to a digital financial service ecosystem. So without further ado, I'll introduce our first speaker, Mr. David Kirk, the Director of Western Policy. Now, Mr. Kirk is the MD for Western Policy Consulting, a limited liability consulting company established in Kenya, with a mission to assist financial institutions, regulators, and policymakers in Africa, Asia, and where digital revolution. Just to add a few to the record of his education, he has a bachelor in economics to Manchester and UK, and has worked in different parts of Africa and Asia in terms of countries. Apologies there, a bit of. Alright, so without further ado, I'd like to
Okay, well, thank you very much. You're controlling the slides from your side, I believe, Australia.
Yes, we will control from this side.
Okay. So, okay, so first of all, just 2 seconds about myself. I've been looking now at digital financial services for the last 10, 15 years. I was working with a bank in South Africa to develop and to pilot test a new digital financial service back in 2001. People talk about M-Pesa being one of the first. It actually wasn't. It was in the Philippines before M-Pesa started in Kenya. and it was in Malawi and various other places before. But it was more successful in Kenya. So what I'll do in this presentation, I'll talk just a small amount about Papua New Guinea, which is not my area of expertise. I'm here to learn. But just to set the context and then move into discussing what's happening elsewhere in the world, in Africa and in Asia. So what we see in Papua New Guinea in terms of financial inclusion strategy is all Papua New Guineans are financially competent and have access to a wide range of financial services that address their needs, and these services are provided in a responsible and sustainable manner. Every country now, pretty much, has some level of similar objective. So digital finance, well, we really want to continue to actively support the use of technology for scaling up financial access. So digital finance is going to create financial access and reach remote parts of the country. And we want to use this technology to provide access to services, to provide quality, and to promote usage of services. So in the strategy, we had a number of priorities to extend the range of digital financial services, to introduce microinsurance, to provide financial literacy and education, for consumer protection. There were consumer protection issues, but we were also going to use digital financial services to look into and promote agricultural finance, SME finance, informal finance, and we were also going to look into data. All of these very, very important objectives in digital finance. So if we take a look at the results from some of the key performance indicators out of the central bank report, we're making progress. We're increasing access points. We're increasing the POS merchants, and we're increasing the number of agents. But these increases are relatively modest in terms of digital finance in other countries. So we've still got some work to do. So what I'm going to be doing in this presentation is giving a few points from around the world as to some of the things that we need to do to get things moving. We also have, in addition to the financial inclusion strategy, we also have the financial sector development strategy for Papua New Guinea. And this strategy noted a number of challenges. So these challenges have been addressed in other markets as well. But the challenges that were noted were weak market competition, limited services for the financially underserved, and there was some exposure to damaging practices. These damaging practices are a feature of digital finance, unfortunately, and we need to make sure that we design our digital finance in the right way. We've also got high usage of cash, which in Kenya we certainly had for very many years. We have a low level and concentrated level of lending. So lending is concentrated in certain areas. We have limited access to capital by illiquid or through illiquid secondary markets, and a limited ability of the ICCC to address scams and other forms of abusive conduct. So we've got a lot to do to design financial services in the digital finance space in the right way to address some of these concerns. We've also been making progress. We've been making progress against how that changed. We've been making progress against I'm fighting my slides. We've been making progress against regulatory restructuring and enhancing roles for CEFI as a channel for consumer complaints. We've been introducing a central switch. We've been talking about blockchain. We've been, the idea of developing a financial services council has been pushed, and we're looking at, and we've been strengthening regulation of savings and loan societies and strengthening AML CFT. So there's a lot of things that are happening, which is wonderful and great. So this presentation is going to be looking at the enabling ecosystems that are emerging worldwide. Things like digital transformation, the factors in successful agency banking, the emergence of fintech and how it's changed things like product development, and also how regulation itself is changing. So the first of these areas is enabling ecosystems, and this is incredibly important. What we're moving towards internationally is digital identity. Digital identity, if you think about it like an inverted pyramid, digital identity is the factor that everything else is built upon. So until we have a unique biometric or digital identity at least, then it's difficult for people to sign up to the service. This is to meet the AML CFT requirements and KYC. We also have an objective for everything to be interoperable within the financial sector. We have digital government, quick, accessible, efficient services, agents for banks and for the mobile network operators, both for mobile money and for agency banking. We have things like financial technology, which operates across all areas of financial services. We need also up-to-date national payment systems, merchant platforms. We need re-regulation. We need to be thinking differently about regulation, which is challenging. And we also have financial institutions that are undergoing digital transformation. Certainly in parts of Africa, we're now talking about neobanks, these banks that don't need a physical presence. And we have some of these worldwide. We have some of these in Asia. In Singapore, we have DBS, for example. We also have legal systems which are able to accommodate change. This is putting legal systems, this whole revolution is putting legal systems under a very difficult time. A lot of stress. So there are challenges that are coming as a result of these changes. So in digital identity, we have competing IDs in some countries. In Nigeria, for example, we have the BVN, the bank verification number, as well as a national ID. And rolling out digital identity is not an easy matter. We've been trying to roll out a digital identity in Kenya, and it's having its challenges. Interoperability. Interoperability is fantastic as a concept, but it's not whether everything is connected that matters, it's whether people want to use it. So pricing comes into the equation very high. If we get the pricing wrong, if it's too high, people then don't want to actually use these interoperable services. In Uganda, with the two MNOs there, the very big MNOs, pricing was one factor that meant that people preferred to go directly to an agent of the network they wanted to send money to send money directly through the agent rather than doing an interoperable transfer. So pricing is very important. And also competition, because whether someone wants to interoperate, they'll find ways to sometimes not to abide by the spirit of interoperability. Digital government requires a lot of data. Data needs to be clean. And one of the problems in government is very often in government departments, the data isn't very clean. And so you get two different databases that have different data. So that data needs to be reconciled. So there's a lot of work to actually get this digital government in place, the connectivity, the digitization of records. For agents, there's a whole issue of agent sustainability, and this is an issue particularly in rural environments. How do we make sure that the work that we're doing to create an agent network is creating an agent network that's sustainable? We also have problems in sharing agents between different institutions as well, even if we have a structure that enables shared agents. Financial technology is going everywhere. It's affecting all areas of financial services, and this is creating by itself a series of challenges that I'll describe later. National payment systems, it used to take about 10 years to evolve the national payment systems in terms of regulations and structures. Now, everything is changing almost every year. So we need to be able to be very responsive in how we create the legal environment. Merchant platforms, they're continuing to evolve. What should we use? QR codes are beginning to move out, but there are multiple competing technologies, and there are multiple issues in rolling out a merchant network. Re-regulation. We're beginning to move into a setup where the regulated institutions, everything used to be conveniently packaged in a bank, and we would regulate a single entity. Now, with fintech, different entities are being set up for a specific purpose. So we're beginning to need to think about rules-based regulation for regulating specific types of activities, rather than necessarily institutional-based regulation. So there are challenges there too. Financial institutions are undergoing digital transformation. Very, very challenging to do. Hugely beneficial, but challenging. And obviously the legal systems, which are struggling to evolve quickly. So if we take a look at some of these areas, digital government, this is just a snapshot of the services that I can get based in Kenya from the government. So I can log into any of these government platforms and get service. And most of my services from the government, I literally go into a central government service, a government login, and then I can log into each of these different government departments and get services. But the challenge is, many of these services are on different databases, and sometimes these databases don't talk to each other very well. So there's a challenge then in perhaps not so much the people that fit the system, but the people that perhaps don't fit the system, whose records are not standard. And as a foreigner who is resident in Kenya, my records are not always in the standard format. I don't have a Kenyan ID number, for example. I have what's called a foreigner's ID. So there are challenges sometimes in making the digital government work. However, it has been revolutionary. To get service now is quick. I can do most of this from my house. I don't have to move out. I don't have to sit in a queue. And things tend to despite challenges in particular departments, it does work well. We also have examples where a national infrastructure has been created, digital infrastructure. And the best example of this is something called the India Stack. The India Stack was created by a company called Icebrit, which the founder of this was the chairman of Infosys, the Indian software company. And it has a number of different layers. They talk about a consent layer, cashless layer, paperless layer, presenceless layer. What this really creates is a structure. So for example, when I sign into a service, I'm at the bottom layer, the presenceless layer, the Aadhaar identification. Over 1 billion Indians now, 1.3 billion Indians nearly, have a digital biometric identification. So all of these services are accessed through your digital ID. When the government of India digitized and put records on the India Stack, they found actually that there were lots of ghost workers, ghost identities. And when these identities were taken out of the system, they suddenly found that they were saving in every quarter the whole price of setting up this whole India Stack system. But in addition to this, we've got other things like e-signature, with this digital locker. You put all your things related to your identity, your education certificates, your title deeds, everything like this goes into your digital locker. Your bank statements goes into your digital locker. As an individual, you can then say, I will give this financial institution access to my digital locker. You can decide as an individual who has access. So this means that a large part of the authentication processes and part of the due diligence that a bank does on a loan, it's already in this digital locker. And you say, here it is, give me a quote for a loan. This is most of the information you're going to need. There's also a cashless layer. All of these, the IMPS, AEPS, UPI Unified Payment Interface, all of these are different payment interfaces. So you can move money from one end of the system to the other end of the system very painlessly. And I think the charges are a matter of 2 rupees. So a very small charge for moving money around the system. So this India Stack is creating a structure which facilitates a whole series of digital transactions. This kind of approach is not the same as most countries, because most countries' digital infrastructure isn't as integrated as in India. And in India, the pricing is such that it doesn't cost much to move money around. That's very different as we move around the world. Okay, so we've got this digital ecosystem. What's this thing about digital transformation? This is playing in the background to all of these digital financial services. Now, if we're going to be an institution that's digitally ready, we need to have certain characteristics. We need to be able to design services that meet people's needs, human-centered design. We use data. We analyze data. We create insights from data. We're enterprise-wide agile. Agile is a software development term, and I don't particularly like it being applied to financial services because I think it's slightly misapplied. But the principle of agility, of being flexible, is very, very important. And of trying something and succeeding or failing and then moving on and learning from that experience. We also need to have flexible technology. Sometimes I laugh slightly when some technology vendors that don't have flexible technology but are very important in the banking industry try and say, we're incredibly flexible, you can do everything, and. There's a difference between what people say sometimes as vendors and what you can actually do. But this last point is really important in digital finance, this concept of strategic partnerships. We don't work alone anymore. Banks are used to doing everything themselves. And now, in this new world, financial institutions can essentially do things a lot with strategic partners, with different types of vendors. And this is particularly important when we're talking about financial technology. But there we've got to also be thinking about this issue of outsourcing and whether we have the right outsourcing guidelines in the banking sector as well. Now, what does it really matter, this digital readiness? Well, let me show you. This is an extract from Equity Bank's annual report. Equity Bank is a bank in Kenya. It's moved regionally, and it's one that I've worked with quite a lot. But you can see here, this is the number of transactions on their different channels. And you can see the branch transactions have slowly been declining. The ATM transactions have slowly been declining. But merchant transactions, agent transactions, and particularly mobile transactions have been increasing hugely. Look at this, they can't even get the scale on the graph. So in 2019, they did 595 million transactions on their mobile interface. Now, what you can't see here, because it's not on the graph, is how the number of customers has increased. Equity haven't opened or hardly opened an additional branch from 2010 to the present day. The branch numbers have been largely constant if we take Kenya, for example. But in that time, customer numbers have increased by about 250%. So what you've got is you've got channels increasing hugely, but not branches. What does this do to the bank? Cost to income ratio has come right down. Equity Bank's cost to income ratio is about 41%. Now, when we think that Equity is a large retail bank, a cost to income ratio of 41% is quite attractive. Yeah, I've seen higher cost to income ratios, but typically only in specialist banks, not in a mass retail bank as Equity is. But in this, you can see that Equity Bank, 97% of their transactions now are digital, and they're not branch-based transactions. Yeah? So a key part of this is agent banking. It doesn't look from the graph that agent banking is particularly important. It's obviously important with 87 million transactions, but it doesn't look as important as mobile. But actually, that's not quite the right way to look at it. Because when we're looking at agent banking allows people always to get money, to get back to cash. And it's really important, particularly in a transition from cash to cashless, cash light, that people have access to cash. It's a confidence factor. Yeah. So agent banking is the mechanism by which people have access to cash, and they put money onto the system to use it digitally when they need access when they need access to certain digital services. So agent banking was launched in Africa in 2010 after Equity was learning from agent banking in Latin America in particular. And today, agent banking operates through much of Africa and Asia. But I've done a lot of work on agent banking. I've looked at 7 or 8 different agent banking implementations. And often, agent banking follows banks moving into mobile money. And they've had bad experiences in mobile money, and these experiences have often delayed the rollout of agent banking nationally. So someone else is moving the slides. Successful agent banking is all about understanding the customer value proposition. What's in it for the customer, the business cases for the bank and also the agents, and also this ecosystem that surrounds agent banking, because agent banking is a stepping stone towards full digital finance. So, in many cases, the financial institution's business case is not properly understood. We have an agent banking strategy which needs to be focused around the particular financial institution and how agent banking facilitates that particular financial institution. We need volume drivers and value drivers. Volume drivers are really important for agents because these are the drivers that create the transactions that agents need to give them money on commission income. Then they're less important for the financial institution. The financial institution likes value drivers, but you need volume and value collectively. Value drivers, this is how the bank actually begins to make much more money. Deposit mobilization. 9 months after opening agent banking in Uganda, Centenary Bank, which is a mass retail financial institution, retired 75% of their fixed deposits because they didn't need them anymore. Now, why didn't they need them? It was because money was coming in through their agent banking channel. So they were getting cheap, low-cost deposits and replacing high-cost deposits with low-cost deposits. Huge benefit, absolutely huge benefit. I think they used to pay 13 or 14% on their fixed deposits, and now they're paying 0. Yeah? So digital credit, another huge value driver. In Equity's case, many of the mobile transactions that you see are actually digital loans. They've pre-scored everybody. Every customer has a credit score, and they can access a small digital loan, a nano loan, instantly. That would only really work if people can pay that loan easily, and they pay that loan through, very often, the agency channel. There are also corporate transactions as well. These are where the corporate has a retail element very often. So a distributor, for example, BRAC Bank in Bangladesh works a lot with a medical supplies company called Pran. And Pran is handling all their cash through the agency network. So this brings up an important point. There are direct benefits, transaction income, less transaction costs, but indirect benefits as well. And it's the indirect benefits which are much, much bigger than the direct benefits. In my estimate from doing lots of modeling, that indirect benefits are roughly 10 times better or greater than the direct benefits. So if you're a financial institution and you're thinking about agent banking, it's the indirect benefits. And how is agent banking going to help you with deposit mobilization, onboarding customers, on integrating with the government? How is it going to help you in the different ways And that's much, much more important than making money directly on the channel. But for this channel to work, it's really important that the agents make money. Yeah. So the agents make money through transactions, assisting clients to perform on-us transactions, transactions using the agency banking channel and generating commission income. Typically, internationally, agents have been used to open accounts. They can't finalize the account opening, that's done in the banking system, but they can do a lot of the processing. They can also handle much of the documentation. They can also promote the channel. So promotion is being done in a village by the agent. So because the agent wants to onboard customers that are going to do transactions on the channel. There is also the fact that being an agent brings more people into your business, into your shop, and that the agent gets some level of prestige within the community by being a bank agent. So the agent has a basic business case. This business case needs to evolve and change over time. So we need to, as a financial institution, we need to improve the agent business case. We need to be looking, how can we drive additional transaction flows? How can we create additional or transitional fees, higher fees during launch periods? Safaricom in Kenya, when they were launching the mobile money service M-Pesa, they paid agents 100 shillings per new account opened. That was roughly $1. Now, once there was volume and a large number of people had signed up to the system, this commission was reduced to 40 shillings, 40 cents. What that then meant is that during the initial startup period, agents were incentivized for growing the system. But it's also about the support that you give to agents, the training, the visits, the supplies, the branding, the complaints handling, the risk mitigation. Transparent commission earning is really important. Agents like to know how much money they're making, and they want to have an idea of this almost on a real-time basis. So if there's one area of agent support to get right, it's this transparent commission earning, and also fast commission settlement. Now, we can also, as a financial institution, support agents with agent-focused products, facilitating agent payments using float. So if an agent can pay for stock, for example, for their shop using float, then they don't necessarily need to rebalance by going to a super agent or whatever, or pulling money from their, pulling and pushing money from their bank account, because they can just spend their float. Other things that we can do is, for the better agents, we can provide daily loans for where float peaks are needed, or working capital loans. We also need to think about keeping cash local. And this is really important when we're talking about rural digital finance. In Kenya, it used to be the case that in 2 payments, cash would come back from out of Nairobi to the capital, Nairobi. So in 2 payments, you would then be pushing money into the rural areas. You'd be going in a truck and carrying cash back out to rural areas. And so the importance of keeping cash local is really, it's incredibly important. And we do that by making sure that the long distance transfers are being done digitally, so that cash, as far as possible, stays local. Now, that's a little bit about agent banking. I've written a paper about agent banking as well, so there's much more on agent banking people can find out about. But in this new digital world, we've also got two things that are happening. We've got fintechs, financial technology companies, and this has led to the emergence of use cases. So if we talk about products in a bank, we talk about loans of different types, an SME loan. In this new digital world, we can almost forget the term SME loan because that loan is created for you as an individual, as a company, as a certain type of company. Using data, things are customized for your particular circumstance. And it's this customization that's leading to, if you like, these mini or micro products or use cases. So this fintech revolution, this slide is now talking about the fact this fintech revolution is very, very broad. It's affecting wealth management. It's creating these new branchless banks. It's using artificial intelligence. Financial APIs, we're connecting to each other in a very, very different way. Insurance is being revolutionized, both on the sales side, but also their internal processes. We've also got issues where technology is being used in regulation. Distributed ledgers and cryptocurrency, they're connected because effectively cryptocurrency is just an account on a digital distributed ledger. This is blockchain. Yeah? And blockchain is going to have a huge series of knock-on impacts and is having impacts at the moment. So, for example, in Kenya, we had 4 or 5 different land registries. If land registries get onto blockchain and you can perfect security very easily, what it then means is that digital title is unlocked. It's unlocking the ability to leverage additional capital. This goes to Hernando de Soto and the Mystery of Capital, which was written some years ago. And so the blockchain now creates the ability for the financial sector to work better. Now, if we're looking at these new digital financial services, we've really got these 7 principles for reimagining financial services. Customers' needs are responded to first, and are the explicit focus. We've got value-added services that sell financial services. What I mean by this is very often the financial service is at the end of another service. So e-commerce, for example, you want to buy something, a particular good, you get it delivered to you, and then you pay for it using digital financial services. We also have a lot of this integrate seamlessly with the lifestyles of customers. So if I'm a youth and I want to do a particular type of transaction, I've got WhatsApp and I use WhatsApp a lot. Well, can we integrate our financial service with WhatsApp, for example? Think use cases which run on apps. Take a look at Equity Bank. Equity Bank have 585 million transactions on their mobile interface. Why is that? There are 65 fintechs that connect onto the back of their mobile app. So it's 65 different fintechs that are actually providing or processing that particular service. So if you're doing foreign currency, for example, TransferWise or World Remit is being used. So this use cases which can run on apps becomes very important. Incorporate data into our products and services. Just gave you the example. Equity have pre-scored all of their clients, which means that if I want to loan a small amount of money tomorrow or today in a few seconds, I can get it. Why? Because data is being used to drive that decision. But we also need to be adaptable, we need to be versatile, we need to change, be agile, and we need to have these partnerships which can create these new products and services. So I'll just give you a couple of examples. In agriculture, for example, in Kenya, or any other country for that matter, I can make an inquiry to a national ID database and to a credit reference bureau digitally. So I know when someone wants to apply for a loan, within a few seconds, whether that person is potentially likely to succeed. At least I know whether they're not the person I want to give money to. But I can also have online collection of data. If they've got a mobile app, I can scrape data from their phone. In some countries, we've also got chattels databases where people can pledge different types of collateral. I can check whether that asset has been pledged already. I can use all this data to produce some credit score. Okay, so that whole part of loan processing is there. But why do I stop at loan processing? I can do a lot to help the farmer. In my farmer app, I can give the farmer information. If the farmer is able to test his soil type, I can integrate that into my system to make sure that the farmer is getting the right seed, the right fertilizer for his plot of land. Uber-type farm services, there's something called Hello Tractor, where if I want to hire a tractor for ploughing my field or for harvesting, I can do that. Yeah, I just say, I need a tractor, this is the size of my field, when can you come? So we're beginning to create services, additional services in a farmer app. Yeah. Now the importance for us as a financial institution is that now everybody wants to have, every farmer wants to have this app on their phone. And this app is creating data which we can use to improve our loan decisions. These things are being done today in different countries. In Kenya, for example, we've got a bank, KCB Bank, that's got a product called MobiGrow. We've also got Safaricom, the M-Pesa founder, who has got a product called DigiFarm. So these things are actually happening. I'm not talking about anything which is theoretical. It's practical, it's now, and we can do it. Other things like insurance. Insurance is very interesting because we lose track sometimes that insurance is about managing risk. Yeah. Now, if we think about insurance as managing risk rather than a product per se, there are many other ways that people manage risk. And it's one of the reasons why insurance sometimes isn't reaching very many people, because they also have other ways of managing risk. In Kenya, we have a mechanism called Harambee, which is where people collectively share money for managing a particular risk. If you've got a problem with health, you go to your friends and you ask them for some money. Yeah, very simple. Funeral clubs. In many parts of Africa and Asia, you've got mechanisms that provide for funerals. Savings plans of different kinds. If we go to Ghana, there's something called Susu, where there's a savings collector that collects money every day. So we can use these indigenous mechanisms and digitize them and use them as the backbone for some of our products and services. because there are ways that people use cash already, and this will be the case in Papua New Guinea, that we can now use as a financial institution because we have the mechanism for doing it. We just need to think differently. I'm coming to the end of the presentation, but this section here on policy and regulation is really challenging. And to begin with, there are two philosophies behind, if you like, regulation. There's a state-based philosophy and a market-based philosophy. So in India, for example, we've got a state-backed interventionist model. So we've got a national system and people connect into the national system. So we create the India stack. Transactions through the system are inexpensive to reduce friction, and government policy mandates use of the system for its transactions. But in Kenya, for example, and many other countries, we have a market model. So the switch is owned by the Kenya Bankers Association, for example. We have a challenge in both systems because there are advantages and disadvantages to using either a state-based system or a market-based system. And it's not always the case that they're mutually exclusive. So, for example, Bangladesh has elements of both a state-based approach and a market-based approach. But in all of these systems, identity is the fundamental building block. Things move much, much faster once we've got digital identity. So, for example, in Uganda, they introduced digital identity. It was only completed a couple of years ago. And then Centenary Bank opened their agency network. Now, it's my estimation that there were roughly 2 million bank accounts in Uganda. Uganda has 40 million people, 2 million unique customers. There were actually 4 million accounts. I've cut that in half to account for the fact that many people were multi-bank. And what we found is that within 9 months of launching agent banking, on the back of this digital identity, Centenary Bank opened 400,000 accounts. So that's 20% of the number of active customers in the country in 9 months from one bank. And there are 20 banks or 30 banks in Uganda. So, but they were able to do that because of digital identity and then using agency to support the account opening process. And the same thing with India with the Aadhaar, and in Bangladesh they've introduced a digital identity too. But there are many challenges in Nigeria, which has separate bank and national identities. In Kenya, there is a new digital identity, and there are challenges. In Bangladesh, getting IDs for the refugee population is a challenge. And there can be challenges also on the initial proof of identity in order to get a digital identity, because many people don't even have a birth certificate. So we need to be creative in terms of how we verify people's identity. But once this process has been gone through, and I know in PNG you've got 2 digital identity projects, this will by itself change the business case for agent banking. And not only that, but a whole series of digital services. But we also have a problem with when it comes to regulation, because I've been inside many central banks, and this whole digital agenda is being handled significantly in the payments department. I was in one central bank, actually in Rwanda, in the Banque Nationale de Rwanda, or the National Bank of Rwanda, and the problem was there, the mandate of the payments department had massively increased, but the capacity was like one extra person. Now, this is a department that was used to handling SWIFT, RTGS, and some Forex, and now they were being asked to do a huge amount of additional activities, and yet their capacity has hardly grown. What does this mean? It means everything goes slowly, because you've not put in additional capacity at the regulatory level. Now, regulatory approaches are beginning to change. We're beginning to move to rules-based regulation. The Monetary Authority of Singapore is one of the first to actually create a rules-based structure. We're beginning to move towards Twin Peaks regulation. This is where you have a regulator for institutions and you have a regulator for conduct. So in the UK, you have the Finance Conduct Authority. You have the Prudential Regulatory Authority. This creates lots of challenges in central banks because of potentially what they think of as losing power. But we somehow have to get this issue of conduct into the center of the central banks, because what we're doing is allowing a lot of different players access to the financial system, and we need to somehow regulate some of the activities of these new players. We also need to be thinking about shared service guidelines. How do we enable the ability of providers to provide services to a whole range of different players online? This is software as a service or banking as a service. What's the regulatory structures that are going to enable this? And I've worked on some of these areas as well. So these whole regulatory approaches have to change, and this is a really challenging area for central banks worldwide. But we also have a challenge for legislation, because we have a whole series of legislation or policies and guidelines that need to be introduced. The government is key in driving transactions. So digital government, which relies upon digital identity and eKYC and interoperability, it's really important. But we also have payment systems which are constantly evolving. And because they're constantly evolving, the laws and the structures need to also constantly evolve. But if you look at payment systems legislation, typically it takes years, 5 to 10 years, to get a new Payment Systems Act in place, which means that the Payment Systems Act is always running behind what's happening in the economy. So we need different ways to be able to spruce up how the payment systems works, perhaps through delegated authority or different ways to amend laws. In Kenya, for example, you can put through an adjustment to the any Financial Services Act through the budgeting process, and it goes through with small changes every year. And I think, strangely enough, this thing that most people don't know about in terms of how Kenyan financial sector legislation works has been responsible for how the Kenyan financial sector has been able to keep up to date. We have a lot of laws and policies around mobile money, agent banking. We have these in PNG. Exclusivity, non-exclusivity of agents. The role of mobile network operators. Mobile network operators can be really important for the ability to open new accounts. If we can ride on the fact they've done some KYC, maybe that can help us provide some level of accounts opened very easily. But tiered KYC can force the use of wallets in banks, a wallet where you have to park money in order to use it. Now, as a bank customer, that doesn't really work because it doesn't create a lot of value for the customer. The customer needs to be able to use their account without having to physically move money into a separate wallet to use. So ultimately, tiered KYC can force, if you like, a suboptimal, in my view, a suboptimal product in a bank. But we also need data protection. Data protection is moving worldwide because of GDPR, General Data Protection Regulations, because these rules that were created in Europe require financial systems that connect into Europe to adopt GDPR, like regulation by the back door. But we need policies around the cloud and the ownership of data as well. So there's a whole series of issues under data protection. There's also issues around access to data. The Open Data Initiative in the UK, PSD2 in Europe, is all about how data can be accessed and who by. And this can be very, very important for stimulating financial sector development. E-signature, contracting, very important that it has the force of law behind it. Consumer protection. How are we going to create the rights for the consumer, especially a consumer that doesn't really know much about their own rights within a system? You know, the majority of people in Papua New Guinea, if something goes wrong in their village, how are they going to be addressed? How are their rights going to be respected? But we've also got the problem that with this increasing level of integration, cybersecurity becomes a real area of concern. What's the standards? What are the guidelines? What systems are we going to be able to use? This is becoming a huge area of concern. Until recently, in the cooperative sector in Kenya, which is significant in terms of number of users, even though it's only 3% of the financial sector by volume, only, I think it was 90-something% of the financial institutions that were regulated had spent less than $10,000 on cybersecurity, which meant basically it was like a sieve. And some intelligent, some bright spark could get in as the cooperatives started to invest in digital technology because they were running behind. And billions of Kenyan shillings, I think it's roughly $1 billion were estimated in a year to have leaked from the financial system because of poor cybersecurity. And then we have things like outsourcing and shared services and regulatory structures to support all of that. So there's a huge amount of work that's being done on legislation for digital financial inclusion as well. But there's also another challenge which we're beginning to address, which is the responsiveness of central banks and other parts of the system as well. This is accelerators and incubators that can help people create good ideas, and sandboxes that are created to test these ideas and to create regulatory structures around those ideas. Now, whilst we're beginning to get sandboxes, in many cases, those sandboxes are still running very, very slowly. So there's a need to somehow help them to function well. But there are still very many challenges. Regulation and approaches on fintech, on digital credit, on payment service providers. These are all challenges around the world at the moment, and we're still in the early days of creating appropriate responses for that. So that's really where I'm coming to an end. So in essence, we need to have the appropriate ecosystem. We need to support that ecosystem with legislation. We need to support that ecosystem by enabling areas like agency banking to get people into the system. Because until they're in the digital finance system and they can be supported by the agents, by somebody local on how to guide them on how to use the digital financial system, we can't get things to work. But where it does work, it can very rapidly transform financial inclusion in a country. As I said in Uganda, one bank in 9 months created 400,000 new accounts, which was equivalent to 20% increase in the number of accounts in the banking sector in 9 months. So if we get this right and we build on digital identity, things can change quite rapidly. So thank you very much. So over to you.
Thank you very much, David. That was very for those who just joined,
I'm afraid I can only just hear you.
So I was just saying, the theme again for today, for those who have joined, is emerging future scenarios in the DFS space for Papua New Guinea. Was that clear enough?
I can only just hear still.
How about now? Is that clear enough?
Much better.
That's better?
Much better.
Okay. So thank you very much again, David, for your very informative presentation. I was just reiterating to anyone who has just joined us that our theme for today and tomorrow is emerging future scenarios in the DFS space for Papua New Guinea. Now we have a number of speakers who are joining us today across the world to discuss possibilities for reviewing strategies, policies, and regulations that currently contribute to digital financial services in PNG. So I'll introduce our next speaker for today, and that's Ms. Teresa Lyon. Now, Ms. Teresa Lyon has spent the past 6 years working on the National Payments System Development Program with BPNG, who contracted the Knowledge Group to develop the NPS vision and strategy to implement the action plan. So Ms. Lyon will be speaking to us today about the Retail Electronic Payment System project. Welcome, Teresa.
Thank you, Roberta. So, everybody hear me okay? Yep.
I can hear you fine, Teresa.
Thanks, Alan. All right, so that's actually really good that we had that great presentation from David, sort of talking about general concepts and principles. And now I can follow through and talk a bit about what we've done in PNG, what the great work that Bank of Papua New Guinea has done. As mentioned, I've been working for 6.5 years now with Bank of Papua New Guinea to develop a national payment system. So initially very paper-based manual system, some good work by the commercial banks and a developing sort of second tier of microbanks and savings and loan societies. But through the leadership of Bank of Papua New Guinea and our whole program of work to look to modernize and develop that whole ecosystem. Just as a suggestion, anybody who's not speaking, maybe put yourselves on mute. I think most of you have done that, but just a little bit of background noise that is coming through from one or two, I think. I'm not sure who's running the slides, but maybe I just say next slide when I'm ready to move through. So next slide, please. So this is just a little bit of a recap of some of the deliverables through the program. It actually started in 2008 when the initial vision and strategy was developed. And early work was a bit slow, just getting things established, quite a lot to do and assessing the state of the system at that point in time. But one of the very critical components was to get a new National Payment Systems Act in place, which would enable the recognition of electronic payments, check images and things like that. Absolutely critical to start introducing some of those electronic systems. So the CAPS project started well before that, around about 2010, looking at the requirements for the Keno automated transfer system to give that base foundation, especially around settlement and systemic risk, putting in place the RTGS system, and also combined with the ACH, the automated clearinghouse, which processes the electronic credit transfers and check truncation. The act itself is fairly high level to give that framework, but it's great to have that modern framework in place. And underneath that, we can then do the supporting regulations, which contain the detail that they mentioned. You know, the one thing we know when we're trying to plan in payment systems is that trying to plan out 5 years out is just impossible because it is moving so quickly. So by having that flexible legislative structure that gives us the ability to have the governor issue new directives or update directives is really good. We also did some work in between working with the government on government payments, putting some links in place for electronic transfers with the Customs Department and with Inland Revenue as well for tax collection. Also with the Department of Finance, that they could do bill payments electronically and start to move away from usage of checks. I've mentioned about the regulations already, so we issued 4 new, well, we issued them as directives that can be issued by the governor rather than having to go through the full parliamentary process. So that gives us more agility and flexibility. In 2019, we also established the National Payments Council chaired by the governor to provide that forum for the key players in the financial sector and the government to come together on a quarterly basis and talk about those key issues and also the strategic roadmap, so we can try and get that cooperation, work together to develop things to the benefit of everyone, both the institutions, the government, the industry, and obviously the citizens at the end of the process. So then once we did the CAP system, very successful, we saw a lot of good results with very much faster payment processing times. Checks went from up to 14 days to clear down to 2 days clearance, reduction in the number of fraud and other issues, lower fees, some really great results. However, limited to the customers of the commercial banks. So great work done by that group, but that left out that whole second tier and a lot of people. So then we looked at what's the next logical step, which was retail payments. And the next program was established to develop the retail electronic payment system and the national switch, which we refer to as REP. So there was quite a lot of work done starting in 2016 with analysis, looking at various models, MNO-led, bank-led, central switches around the world. You know, we know that we're doing a lot of things in PNG, but it's not something that hasn't been done before. So wanting to look at other examples, learn from the lessons out there, and the national switch was chosen as the appropriate model for PNG, knowing that we had all those various good players out there, MNOs, microbanks, loans, and the commercial banks, and also the allowance for payment service providers to come along under the new directives and be part of the system as well. So the switch launched in July 2019. I've got some upcoming slides that will show the progression. It's a big program of work, so structured in phases. And now in 2020, we're working on, initially it was card payments. We're now working on retail, what we call instant payments, which is a transfer that's credited immediately to the recipient and will enable you to use mobile phones, both basic phones and smartphones, to transact that, as well as internet banking. Next slide, please. So this is just a summary of the payments that processes through CAP. I won't say say too much about it. We launched our direct credit early in 2015. The really great thing that we can see here is that open jaw effect, where the direct credits have continued to climb up over time, and a corresponding drop in the number of check payments. Just showing that uptake of electronic payments, that when they're working and they're accessible, people are using those. And the bottom line is just that low number of RTGS payments, which you'd expect, just those high priority, high value payments running at a low quantity. But really pleasing to see that uptake of the direct credit payments. But again, great for the commercial bank customers, but how do we make that accessible to everybody else? Next slide, please. So when REPS was formed, and we got some input and assistance from the World Bank, so thanks to them for giving us some guidance along the way as well on some of their vast experience. And we just crystallized what the objectives were for this program. And it's a lot of those similar terms that David mentioned as well: safety, efficiency, interoperability being really key, so that rather than even here in Australia where I am, you've got lots of different ways to pay for things, a wallet for this and BPay and different things. And in PNG, because we had a bit of a sort of fresh area to work, we wanted to have connected options rather than having separate options. So having those interoperable systems where no matter who your account or wallet is held with, you can make a payment to any other account or wallet that'll just transition via the switch, which does the routing and then the settlement as well. Key thing is to enable those smaller institutions and as well as payment service providers to enter, keeping costs down so you get that competition and consumer choice. Again, the similar terms, reliability, efficiency. And I think with the central bank taking a leading role, you get a little bit of extra safety and stability and building that trust as well, which is really important. As we progress through the program, reaching out for more geographical coverage will be a key theme in phase 2. We've talked about the National Payments Council giving us that cooperation, and really just to have that accessibility for all service providers as well as all citizens to the financial services, and working to drive PNG away from a cash-oriented society, acknowledging it still has a role to play, but because of the cost and complexity, to offer better electronic options for people. Next slide, please. So this is an overview of the program itself, focusing on the first 2 phases. So phase 1, it did take us a few years to get it all in place, but that's because initially we called it National Switch, which took to be just technology. So by renaming it to REPS, it actually just shows that it encompasses so much more. So we had to review the regulatory framework and issue new directives. We reworked the commercial framework and put in place a new multilateral operating agreement rather than previous bilateral arrangements. So each institution doesn't need multiple agreements with everybody else. They just have a single agreement with Bank of Papua New Guinea with a single set of rules that apply to everybody. And then on top of that, that core infrastructure, so the national switch itself, the secure internet connections, or not internet, but the secure connections out to each member. So we know that we've got that safety and stability ensured through the system. So phase 1 was really about building that base, breaking down into 2 sub-phases. So first establish it and link up existing card services. And then when we bring in the transfer payment as well, which I mentioned, we're referring to as instant payment transfers or an instant payment transaction. So adding that to the mix, we've got both cards and transfers covered with our first core group of members, which you'll see in the next slide. And then beyond that, in phase 2, then starting to look at some of those more innovative options. What sort of services can the switch facilitate to get that greater reach, to provide cost-effective options, and really to look at what's been successful elsewhere in similar environments and what's going to best meet the needs of Papua New Guineans. I'll come back to some of the other things later. But yes, we're working on phase 1 and 2. Future is really to be defined as we go, knowing that the only thing we know for sure about payments is it's not going to be the same in 5 years' time. So to monitor that evolution and provide the facilities to support that. So just as another view, what is a national switch? So it is that centralized infrastructure, which does the card and mobile switching. And it also does link through to the CAT system and automatically does settlement every business day. So it sums up the amount of each institution and does a settlement between them every morning at 11 a.m. every business day. So our first institutions to connected were the commercial banks, BSP, Kina. We also had NCSL, National Contributor Savings and Loan Society, join in July last year as our first small group while we were just getting everything set up with the large new system and ensuring it was all working and keeping the initial volumes low. You can see that they have various networks of agents, ATMs, and FPOS devices out there, so they operate those. We connect to their switches and their core banking systems. In the second group, we had People's Microbank, Nationwide Microbank, Notice My Bank, and Westpac joined in September last year. Similarly, they have their own networks. Now, also as part of Phase B, as we're looking to introduce the instant payments, we were talking with Digicel. We've also spoken with other MNOs and potential wallet providers to get them connected so that they can interoperable with other accounts and wallets as well. And then as they are ready, they've got the systems and capabilities in place, wanting to add more microbanks and savings and loan societies, as well as any other non-bank institutions or payment service providers who will be providing payment services in PNG. There is potential for the switch to directly operate FPOS devices and ATMs, whether that's added or not. At the moment, they're operated by the financial institutions. It's just one of those future options. And it's also possible to route international scheme cards through. Initially, we had that in Phase 1B, but then we thought, well, for financial inclusion, it's far more important to get those basic services in PNG, and we'll leave the banks to manage the international schemes until such point as it makes sense to bring that in as well, if the full interoperability makes sense. So that's what a national switch is. Well, it might be worth just backing up as well. I know we talk about retail payments, and what do we mean by that? You know, we often hear those terms P2P, P2G, P2B, etc. So we've just got a little diagram here that looks at, you know, what sort of payments do people make? Our types of payments, we've got cash, which we know is still heavily used, quite a few debit cards and a few credit cards. For our CAPS graph, we're seeing, you know, good usage of direct credits now, but those do only settle 4 times a day, not immediately, so they do have some limitations. Truncated checks, so the images are clearing, but there is still a 2-day settlement and a risk of checks being dishonored. So they're still a bit clunky, but far improved with CAPS. And now we're working on introducing those retail instant payments. So whether people want to make a purchase in a shop, do a transfer to a family member or another person, either to an account or to a wallet, that can be facilitated through internet banking, as well as by having access to the ATM. So you've got the notes and coins still accessible through those facilities. On the other side, then you've got the institutions who provide the accounts and the services, ATMs, etc., and they also provide the channels at this stage. So whether they're doing cards with devices, mobile phones, internet banking, or e-commerce is the kind of the institutions at this stage. Some of those are services that could be provided through the switch as well, but that's where having it shared council to look at the overall strategy and what makes sense to provide as a shared service versus let institutions develop their own, and where competition makes sense, but where the economies of shared services make sense as well to help keep costs low. That's just sort of an overview on what we're talking about with retail payments. Next slide, thank you. And then we also looked at the governance model, just to look at, making sure that as we went through this, we didn't just dive in, we looked at what is it really trying to achieve. And again, you're seeing some of those similar words, inclusive, effective, interoperable, reliable, trusted, which is, again, where BPNG can really provide some good trust factors in there. Also with trust, that was the key thing with being able to make it accessible for savings and loans and microbanks. Because while they did have some services and they've done some fantastic work, many of them do have that trusted relationship with people at lower income levels. So being able to bring those people into the financial system and being able to transact either through cards or mobile devices was a really key driver for us. And obviously important as well is to have international standards. So we've got a structure in place using ISO standards and defined APIs so that it's very straightforward, very clear cut. There's primary way that people connect to the system and international standard format so that it makes it easier and more accessible for anybody who wants to connect and join. Now I mentioned we've got the settlement through CAP, so you get that counterparty risk. It's summed up each day at midnight and then settled through the central bank the next morning. So there's no risk with individual providers not being able to settle their obligations each day. Next slide, please. And this is just some stats on REPS since it's launched. We launched in July last year, so just about 1 year old on the 21st of July. We intentionally kept it low at the start just to allow all the new systems to bed in, make sure all the operations, security, backups were all in place, because resilience of the overall system was absolutely critical. Then bringing through some more members in August, September, volumes growing really well around December, a little bit of a drop off with the pandemic impacting and things being shut down earlier this year, but starting to come up again in May. And we actually achieved some significant milestones just this past weekend. So far in 2020, we've now had 1.1 billion in value of transactions, 1.8 billion since go live in July. In 2020, we've had 7 million transactions switched, and since go live in July last year, 10 million total transactions. So, really pleased and thankful to the banks who've embraced the new systems, the people who are using it, the vendors who've supported, the other parties who've supported. We've seen some really good uptakes there, some great results. Thanks to everybody who's contributed so far. But that's only phase 1A, so we still have a lot of work to do. Next slide, please. So EPNG is doing that inside program. So we talk about, the switch as well as all the supporting regulatory, commercial, and other frameworks, the interoperability, allowing everybody to connect. And when we introduce the instant payment transfers, the idea with that is every connected institution or MNO or PSP, who, whichever group they fall into, their account and or wallet will be connected to the national switch via that secure link. So any account holder or wallet holder at any bank, microbank, savings and loan can do a transfer through to any other connected account or wallet. And it'll be available in real time. Now, whether that's just through an internet banking interface, we want to support USSD services, which are the menu-driven models for basic phones. Several of the banks already have mobile apps. That is something that we can provide as a central service as well in phase 2 to have a centralized app that smaller institutions can access to provide basic functions. So there's quite a lot that we're doing within the program, so it's a big program of work itself. Unfortunately, we have had some delays this year with the virus, so we were hoping to launch the payments in July. It hasn't been able to happen because obviously our members have needed to focus on BAU and keeping things operational in the short term, and obviously health and security is a priority. So we're now just working on updating the plans and looking to try and launch that in the fourth quarter this year, because that payment type will be the basis for the innovation and all the plans that we have to follow. Some of those things that David also mentioned, being previous slide. So the darker circles on the inside is the REPS program. But outside of that, I put on their national program because we know that there's a lot of other partners, groups, agencies doing some fantastic work. There's such a lot that needs to be addressed, as David said. You've got the identity components, the role of agents, and awareness and marketing, obviously critical. Fellows, which is our Federation of Savings and Loan Societies, provide a bureau service for some of the smaller savings and loans. Some of those non-bank financial institutions, smaller ones who want to join but need support to build up capacity, both systems and knowledge. Also, potentially pilot testing their products and services for PNG environment and underpinned by financial literacy and training. So CEFI's doing some great work there. we're very keen, we've been trying to engage as much as possible with other projects and parties that we're aware of, but keen to just keep talking to everybody because the collaboration is crucial. It's not beneficial to duplicate these things. There's so much that needs to be done. If we work together, we can achieve a lot more and achieve it faster as well. So, very keen to hear today what else is happening out there, things that we do and don't know about, and how we can connect with things where it makes sense. We're talking with the likes of the AML group, making sure that the KYC is covered in the identity space, but mostly leaving that to others because there's a lot of projects happening in that space. We know ADB is doing some good work supporting some of the non-banks. The PFIP program's done some great work as well, so I'm interested to hear what's happening there later. But just groups like this where we can get everybody working together to coordinate is always helpful. And last slide, please. So just summarizing, what REPS is aiming to enable for digital financial services is that open access, facilitating the products in digital financial services. And it's not really the Census Switch's purpose to define those products, but to work with the members to facilitate products and services that really meet the needs of people. Because trying to force things on them that don't meet their needs isn't going to be successful, but understanding what the needs are, what the gaps are, and how we can facilitate that. By increasing competition, getting lower costs through. So we've already had some really good results with CATS. We've seen fees come down for direct credit and check payments, great reductions there, again, benefiting commercial bank customers. So how can we make that available to everybody? That enabling environment, so the international standards and access to encourage innovation and competition, and leading through to once we can get the mobile services in place, that extended geographical coverage. So getting out to all those rural and remote areas as well. And obviously, as David made some of his points around support for people, that agency space is a key one that we're not looking at directly, but knowing it's really important and keen to work with those who are to make the products work for everybody. I think that was the main points I had. I don't know if anybody has any questions now or what's our time. Yeah, I've used all of my time well and truly. Sorry about that.
We'll take questions at the end of the session. Yep. So thanks, Teresa, for that very informative session around the retail electronic payment switch. I think it's pretty clear we need everyone's important collaboration within the ecosystem to make things work. And to move on to our next presenter, the essential part is to understand the Coral Sea cable in terms of connectivity to have access to these digital services. So I will now introduce our next speaker. In place of Mr. Paul Comboy, we have Mosley Ellie, who is speaking today on behalf of Mr. Comboy, who was unable to attend today. Now, Mosley graduated with a Bachelor of Economics degree at the University of Papua New Guinea, and he's been working in the telecommunications space for more than 10 years. He is currently the Executive Officer for PNG Data Co. Limited. So, Mosley, welcome, and you can start with your presentation. Thank you.
Thank you, Roberta. And ladies and gentlemen, can you hear me? Am I clear?
Yeah, you're very clear.
Oh, thank you.
Yeah.
Okay, basically, I'll be talking about the Coral Sea cable, but the Coral Sea cable forms the part of the national transmission network that DataCo is building at the moment. So my presentation will be basically about the journey and the impact of the national transmission network to the PNG economy. Next slide, please. Okay, I'll talk about PNG Data Co since it's a new entity. Also, we'll be discussing about the national transmission network vision, and then we'll get a brief update on the projects. That's the Coral Sea cable project and the Kumul Sabun cable network project. The Kumul Sabun cable network project connects all provinces in PNG. That starts from Lae to Port Moresby and also the Momasa region, and the Highlands region, and also the Southern region. And also, we'll discuss about the product and network platforms for the national transmission network. And then we'll look at the other benefits of the national transmission network towards the end of the slides. Next, please. PNG Dataco was created in 2014 after an wholesale study been done by IPBC. Now it's the Kumul Consolidated Holdings Limited. So it's due to the fact that the price of internet services was very high in PNG and less accessibility to the PNG market. So the government approved in an NEC decision for Dataco to build, own, and operate a national transmission network. Okay, since the establishment of Dataco, we have provided services under CSO, CSR arrangement, especially in the education and health sectors. And we have also built the network all across the PNG. In that I mean the Highlands region as well as the maritime provinces of the country. So all 22 provinces are now covered by our network. We have points of presence in all, especially the capital towns in PNG. And we also have the international links to Asia, to Jayapura, which is now under construction, and to Australia, to Sydney, and also in Guam, in the USA. Okay, that is to create a robust backward network for ISPs and all the government agencies as well. And also we have increased reliability and make like the NTN a one-stop shop for internet, cloud servicing, and hosting and other services as well. So recently we have built a 24 hours modern NOC in our gateway station as well. So this is basically about PNG Dataco and what we are doing at the moment. Next slide, please. Okay, as you can see the PNG map there, we have completed like almost the entire country through our Kumul submarine cable network. And then we have also connected the Highlands region from Yonki to Goroka to Hagen and then to Tari and then to Mendi, Wabek. You know, it's all been connected. And also we have the missing the LNG fiber all the way from Port Moresby and all the way to Heights. And then there's only a missing link that we're trying to connect from Heights to Tari and to Mendi. So once that is connected, we'll have a robust network. And then you can see we have the international links to Sydney, to Guam, and then to Jayapura. So next slide, please. Okay, for PNG Dataco, currently we have around 7,000 kilometers fiber in both our terrestrial and national transmission network, which includes the domestic network. So that includes the PPC1 and Coral C because they are managed by different people. We just buy services from them. The Coral C is managed by the Coral C Cable Company, which is a subsidiary of the three consists of DFS, Solomon Islands Cable Company, and PNG Dataco. Okay, as you can see, we have the local the fiber that is the local connectivity, and then we also have the satellites. It's like 461 satellites, and then we have the online. It's like 319. Offline is 142. So 142 is only offline is the very small satellite services. For the POPs and gateways, we have 8 online. We have 9 CPI. We have 4 international gateways. We have 4 international POPs. We have 3 O3B gateways, and we have 2 data centers, which is under construction now. Next, please. Okay, since the introduction of Dataco in 2014, you can see that the price has drastically reduced. The internet price has drastically reduced from more than like between 3,800 kina. Now it's coming down to 350 kina per Mbps. So what you can see is after the completion of the island fiber, it has come down. And then we will further reduce after the completion of CS2. It's already completed. Once it's already commissioned, and after we've discussed with the regulator and all the necessary parties, we will come up with a new price. And then the KSCN may bring the price down as well. Next slide, please. Okay, as you can see, the Kumul submarine cable has covered all the provinces around the country, from Port Moresby to Alatau, to Papua New Guinea, Medeng, Jayapura, Vanimo, Wewak, Lorengau, Medeng, Kimbe, Kevin, Kokopo, Arawa, Kerama, and Daru. So from that view, it's like Dataco has covered the entire country already. So we are now waiting for the Fed announcement for RFS and the launching of the KSCN network. Next, please. Okay, this is our product and network platforms. Our products are international privately circuits, IPLC. We have metro point-to-point or 2P2P services. We have the long-haul point-to-point services. We have the ocean internet services and the data center and cloud solutions. As you can see on the picture out there, that's our modern data center, which is built at Gel Edge Station. Our network platforms, we have the fiber optic cable, that's OPGW and KSCN. OPGW runs on the terrestrial links, like on the land, while KSCN is the submarine cable network project. We have satellite systems that provide backups for our submarine cable systems, the O3B, the VSAT, and the DOMSAT. We also have the Kumul International Gateway, which compromises Medeng and Port Moresby. And our international hub, that's Sydney. We've got 3, that's Global Suites, Equinix, and then we've got Guam and Jayapura. And our data center is built in Port Moresby, and Medeng will be a backup for this disaster recovery. Next slide, please. Okay, this is our data center cloud solution services. We'll do co-location commencing this year for full rack unit space. We also do storage services, NAS, SAN, for virtualization services, that's LAAS or PAAS. And then we also do, we provide cloud services for private and public with SaaS. And we also provide business continuity planning and cloud security technology for our customers. Next slide, please. We believe that NTN is the tool for development, for socio-economic development. It's like having a real-time home entertainment. For remote health centers can provide reports back to the main district, sending of slides for scan services. We also believe in distance education to provide quality education for the students. We also want to partner with the government to provide NID services, EGIS services. We also want to partner with the tourism industry for e-tourism, and also with central bank and other banking sectors in PNG for e-commerce, which we are discussing right now. So as per the World Bank study, we believe that it's indicated that every 10% increase in broadband penetration in the country will generate 1.3 growth of national GDP. So Dataco, we trying to be part of that to improve the availability of our services at a reduced cost. So this enables increased community service access to electronic commerce and electronic government services, thus improving service to clients and reducing costs to government as well as for business in PNG. Next slide, please. Okay, as you can see, these are some of our the benefits of NTNC. Dataco is a new company. We are trying to bring our services to all customers regardless of discrimination at a reduced price. So one of our key partners are the hospitals in our country. We have a program called telemedicine where our doctors send slides to Port Moresby or Egypt or whatever for for interpretation of those data. In the past, it always take like 3 months, 4 months. Now it's taking a day or two. Also, we have gone to community schools, set up computer labs as part of our CSR, and also we have partnered with all our major universities in the country. And for teachers, and then it worked very well during the COVID situation where there's much like interaction between teachers, between lecturers and students during the COVID situation and the lockdown period. And one classic example is Ayura National High School. In the past, the results were like 14, 15 in the national examinations. After we connect the NTN fiber, the results improved drastically from 11 to 2nd place in the country. Next, please. Okay, what we're trying to do, without this infrastructure, there will be an impediment. But we think that, DataCo is now building the NTN project to run NID, to run the platform EGs and other e-governance, including, the APEC. We have supported APEC in 2018. And we believe that a partnership with Central Bank and other agencies in the country will be the way forward in all our programs as well. Next, please. And as you can see, here is the impact of the wholesale market. The price of internet came down, as I've spoken, it is like in 3,800 per Mbps. Now it's only 350 per Mbps per 1 gig link. So that will be further decreased once we commercialize the KSCN. Okay, the long-haul fiber connected to all provinces is done already. It's near completion. Okay, we have international links, like I said, to Sydney, to Guam, Jayapura, to POM, and also Meding. And then low latency to our POPs in Sydney. So it's around 38 millisecond round trip from POM on the CS2 cable. So CS2 has also made a very drastic contribution to latency as well. Next slide, please. Okay, as part of COVID-19 response, we have assisted the universities, hospitals, and some commercial banks in PNG, as you can see. For example, in PNG, they have got 180 meg. We have given them extra 100 megs. Limited, they have 200 megs. We have given them 100 megs as subsidy at subsidized cost. UOG, they have 50. We have given them 30. School of Medicine at 3 Mile, MedFed, we have given them 50 megs extra. Divine Wood, we have given 100 meg. And then Port Moresby General Hospital and a commercial bank. So DataCo is happy to partner with the development of PNG in all sectors, and one of them is education and health sectors. Thank you. Next slide, please. I think that's the last slide from me. Otherwise, we know that the NTN platform is the enabler for social economic growth in PNG, and we are more than willing to partner with all our development partners, including the banks in the country. Thank you very much.
Thank you, Mosley. Thank you very much for the presentation. I think we all are aware that we will expect prices to drop soon, and PNG DataCo would make that announcement for everybody else. It's good to see that you are keen and open to the new ways of working during this new normal period of COVID-19 impacts globally. Okay, so moving forward, before we continue, I'd like for participants, if you have any questions, please type in your questions so that we can ask them at the end of the session. Now, moving on to our next speaker, I'd like to formally introduce Mr. Caleb Holmes, who is the ICT advisor to the Bank of Papua New Guinea. His presentation would be around the BPNG regulatory sandbox under new innovations. Now, Caleb has over 40 years experience in the information industry, and he worked in Hong Kong, Singapore, Philadelphia, London, Australia, New Zealand, and PNG. He has extensive experience in the provision of strategic management and ICT regulated consultancy services to both the government and private sector clients. So without further ado, Caleb, you may proceed with your presentation, and welcome.
Thank you very much. Okay, want my first slide there, please? Okay, next slide. So what we're going to try and cover in a very short period of time is the work that we've been doing at BPNG on our regulatory sandbox. We established this regulatory sandbox for a number of reasons, which I'll go through and explain in a minute, but this is really what we're going to cover. What is a regulatory sandbox? Because there is some confusion among some people. Why on earth is the Bank of Papua New Guinea doing this? Why should we be using a sandbox? How does the whole thing work? What is the life cycle? And where do we go from here? And then obviously any questions and answers. Next slide, please. Right, a regulatory sandbox, what is it? Well, it's basically, it's not a place, even though this particular graph would suggest that it is. It's a virtual environment where you can build almost anything you want. The whole point of the regulatory sandbox, as opposed to any other kind of sandbox, is to test whether or not the innovation that is being put through the sandbox will need regulatory relief, or whether the regulation needs to be modified. It's about, we know that from all the research that we've done over the last 3.5 years, we know that innovation follows funding and funding follows innovation. What we wanted to do was to bring as much innovation and therefore funding to PNG as we possibly could for the benefit of financial inclusion. Okay, so it's not a place, it's not a destination, it's an environment where you can build and test things that you may not otherwise be allowed to do because of the various financial licensing arrangements. Okay, if you need some regulatory relief, then that would be up to the regulator, i.e. the Bank of Papua New Guinea, to determine whether or not the risk involved is commensurate with the benefit to be gained. Okay. Now, remembering that a lot of the regulations in Papua New Guinea were written many years ago, it could be that some of these regulations are no longer fit for purpose for the 21st century. Okay? So it also means that in the sandbox, which we monitor very closely, if there was to be some kind of failure as a result of trying this innovation, we can contain it very tightly. Okay, let's move on. Okay, so why would the bank be involved in this? Well, because one of our pillars of our strategic plan is financial inclusion, i.e. how do we get more PNG citizens using the financial institutions and sector services as is possible. We know that less than 15% of the population have got a bank account. Okay, and we want to use the new technology to promote development and growth of the sector. We know that it has the potential to lower fees and charges, and as I said earlier, it makes PNG far more attractive for both innovators and investors. We want to make an environment where people will bring their innovation and their funding to PNG as opposed to going somewhere else. We want to provide a testing ground for our existing regulations and ensuring that they are fit for purpose, as I said before. It also allows us to begin to understand the issues and pitfalls of these emerging technologies and business models. Governor Pakani, who is the governor of Papua New Guinea, the governor of Bank of Papua New Guinea, made a statement at APEC 2 years ago that said, ignorance is not the basis for good governance. It is our responsibility for us to understand this technology or these technologies so that we can be a good regulator. And the sandbox is a way of us achieving that. Next slide, please. So why use the sandbox? On the left of this slide are all the things that happen when you don't know what you're doing. You don't know what risks you're going into. You don't really know what the benefits are. Many people aren't sure about the business model they're going to be operating. They don't understand the technology, so on and so on and so on. To the extreme right of this diagram are the things that you get as a result of going through the sandbox. You get to understand more about the KYC or the eKYC. And I noticed that AG Pittick is on the line on this call. AG Pittick's team are working on looking at how we produce the eKYC version for BPNG. Also, we need to begin to understand issues around licensing and consumer protection and cybersecurity and digital and trusted identity. We have a major project underway about digital identity at the moment. So the purpose of the sandbox is to test these things in a safe and controlled environment. Next slide, please. This is a slide that kind of shares with you the principles and the criteria, because when we started to put this together, and I must say with the help with ADB, we decided we needed a principles-based methodology. And so our principles were based around some criteria. It had to be fair. It had to be equal for all participants. It had to be clear and transparent so that everyone could see what was going on and that people weren't being treated differently. It had to be forward-looking. And then the last one there is proportionality. Proportionality came up as a principle that meant that things had to be in proportion to the benefit to be reaped. So, for example, if someone only has a limited amount of physical identity proof, then that should not stop them becoming the possessor of a bank account. However, it may mean they can have a bank account with some restrictions on it, and that would be in proportion to the risk that they represent. So if you have an innovation that supports those principles, then we would then begin to look at an application from that innovator against certain criteria. So what is the scope of the innovation? Is it actually innovative? Is there a need for this innovation? Where does it fit with the regulatory compliance? How much research has been done? Because this is not an environment for doing software testing. It's an environment for testing an innovation against the regulations. Okay? What due diligence has been done? What reporting will be required through the process? How will you know when to exit? We've said to people, and we currently have 5 in the pipeline, that people are allowed to go into the sandbox for a period of 9 months with a market-ready solution against which we will test them in the regulatory environment. Okay, so by what criteria, applicant, will you know when it is time to exit? We want to know that before you go in. We want to know how you are going to test your solution. We want to be able to see underneath the hood so that we are confident there are not backdoors or any nasty things in this innovation. We want to know how you're going to deploy it. We want to know how you're going to protect the users, because you're going to be using real customers' data with real customers in a real environment. It may only be 50, it may only be 100, but we want to know what you're going to do to protect them before we let you get near them. So that's the basic criteria and principles by which the bank is looking at these innovations. Next slide, please. This is the life cycle, and it's pretty straightforward. From the left to the right, an applicant fills in the application form, which is on the BPNG internet site. They fill in an application form. It is submitted. Does it meet our principles? If it meets our principles and our criteria, we move into evaluation. There are a bunch of evaluation criteria, as I've already described. That goes before an evaluation committee, which is made up largely, but not exclusively, of people with a technology background. But we have also very carefully made sure that we have access to subject matter experts, both from within the bank and external to the bank, so that we can bring in that expertise to help us look at these innovations. I mean, the great thing about innovation is you don't know what's going to be on the other side of the door when you open the door. Presuming it gets through the criteria, it goes into this virtual testing environment. And that's what we call the sandbox trial. It could be that the test will fail by its own admission. It could be that the applicant says, I need an extra 6 weeks or 2 weeks or something like that, just because I want to make sure doubly that this aspect of my trial is complete. And we would probably grant that. If an applicant came back and said, I need another year, we would probably say no, because you were never market ready in the first place. At the point where the applicant has determined that they have been successful and we have agreed with them, at that moment, all regulatory relief stops. And within 9 months, as part of the conditions, that product has to be implemented in PNG for the benefit of PNG citizens. Otherwise, PNG citizens are not getting anything out of this. There's only one country in the world that is also doing this, and we think it's critical that PNG citizens get the benefit. So from the point where you come out of the sandbox, all of the normal PPNG processes and approvals from a regulatory and supervisory control point of view all kick in again. It's also why almost, and it's not confirmed yet, but almost all of the applications that we've had so far have been teaming up with a local financial institution that is already regulated by BPNG. That way, they don't have to go through a licensing regime issue. Next slide. So here's some questions that we get asked all the time about the sandbox. Who owns it? Who regulates it? Well, we do. Who uses it? Well, there are basically 3 groups of people: authorized financial institutions, as you can see there, innovators with the solutions that are deemed to require a license in the future, require our approval as the regulator, and can accelerate financial inclusion, because that's the end game. Or financial developers working with a financial institution related solution, or that represent financial inclusion for PNG opportunities. Okay? Our expectation is that most of them will be a combination of 1 and 3 there. Next slide, please. Why use it? Well, because it can provide potential relief from innovations that might not otherwise ever see the light of day because of the regulations. Yes, we have to be a regulator, and we have to be a good regulator. We don't have to be a blind regulator that insists on sticking in the past. We want to get access to other markets. One of the issues that we found when we were putting this thing together was that the sandboxes around the world that are deemed to be successful are not very interoperable. It's not very easy for someone to go through the sandbox in Singapore, take it down the road to Indonesia, and say, we've been through the Singapore one, we want to launch this product in Indonesia, and then the Indonesian bank turn around and say, oh, you've got to go through our sandbox. We have tried to design our sandbox so it's highly interoperable. The other reason why you use it is you get to use real customers using real data in a safe and secure environment, and that's critical. What does it cost? Nothing. We decided at the bank that charging something like $1,000 US to enter the sandbox was nonsense. It costs more than $1,000 US to manage $1,000 US. So we decided by putting in the caveat that you have to implement in 9 months, we were willing to carry the cost of the application process and the monitoring process. How do we find more? Well, there are all the application forms and the information packs are now actually posted on the BPNG website. So please, they're all public documents. Please feel free, anyone on this call, to help yourself. Next slide, please. And that's it. That's the BPNG regulatory sandbox.
Thank you very much.
The first in the South Pacific, I hasten to add.
That's great. That's good to know. Thank you very much, Caleb. Just another call out against the participants. If you have any questions and answers, please send them through. Now, I guess we'll move on to our next speaker. Apart from all of us learning that we do have a virtual environment, which is basically a regulatory framework for new innovations, plug and play, to contribute to DFS. Now, our next speaker, moving in, Kathleen, actually. Catherine, Tony, apologies. Catherine will speak in as she has a meeting at 11:30, so we'll bring her up to speed with presenting first. Now, Catherine is the lead in technology working for Finequity. Prior to this role, she worked with the GSMA Connected Women Group and FHI 360, focusing on digital inclusion activities, digital literacy, and gender equality. So her presentation today would be around current practices and lessons learned relevant for PNG around digital financial literacy. So Catherine, welcome you to present. Yep.
Can you hear me okay?
Yes, we can.
Perfect. So, very pleased to be here, everyone, and thank you for super interesting presentations so far. I've very much enjoyed them. As mentioned, as Roberta mentioned, I work for Finequity, which is part of CGAP, which some of you may or may not be familiar with. It's located in Washington, D.C., and it's part of the World Bank Group, specifically looking at women's financial inclusion. Finequity, CGAP is looking at financial inclusion writ large. Can we go to the next slide? So, Finequity is a community of practice, and we're about 1,500 people globally across 400 organizations, and it's really it's a mechanism to interact. It's a learning exchange between organizations and people. It was founded about 3 years ago by the Bill and Melinda Gates Foundation and CGAP, with an idea that after 30 plus years in women's economic empowerment and financial inclusion, we're really not seeing the gender gap shift in women's access to finance. And so Finequity was established. We have 3 working groups: social norms, data and measurement, and technology. And I lead the technology. Incidentally, I have spent quite a lot of time in Papua New Guinea with the GSMA and other organizations, so I am not coming at this completely new, but I've certainly learned plenty of things today. Can we just flip to the next slide, Roberta? So, as I mentioned, it's really a platform to share tools, ideas, best practices, to collaborate. So we do a lot of things around peer reviewing and providing input into other organizations' work. We do have a lot of webinars and in-person events that we try and have in different locations around the world, and to really sort of say, okay, well, what's working, what's not working, what could we be doing better, and what could we learn from each other. So, next slide, digital financial literacy. Now, it's really great timing for this, actually, because we just had a 3-week e-discussion on digital financial literacy with Finequity. So this was where we had people chiming in from across the globe over 3 weeks with 6 different sessions, which tried to address what was digital financial literacy. Often I find that people are very, very quick to say, to blame a low uptake of a service on a lack of digital financial literacy. So, where you see people not using a mobile money app, people will say, I've heard a lot, they don't know how to use it. It's the audience has low digital financial literacy. And often it's actually more of a design issue, or it's a literacy issue. So they might well be able to use it, but their literacy levels actually prohibit them from using a text-heavy, basic phone interface. And so what we did was really sort of started to think about what this actually was. And it's, created this Venn diagram of digital literacy, which is the competence and knowledge to use digital tools and resources. So, your mobile phone, your tablets, browsers, anything that involved technology, and financial literacy, which is really the knowledge and the awareness and competence to carry out beneficial financial behaviors that, will support practices such as saving that encourage resilience and livelihood growth, etc. So we have defined it as the application of digital literacy and financial literacy to enable the use of digital financial services. And within this, we consider within Finequity and the community, we have discussed these 6 components of it. So they are, design and the need of the design to be intuitive, access, how you can use it, whether or not you can use it, numeracy, consumer awareness, literacy, and social norms. So just to kind of, talk about these enablers, these 6 enablers a little bit more. During the course of the 3-week e-discussion, the first enabler that we discussed was literacy. And, people often would say, these women, and I must caveat this by saying that Finequity does focus on women primarily, exclusively actually, but there are a lot of lessons here that can be used across vulnerable populations. So in terms of literacy, it's not just about can you read basic words. It's really, about the language used, and this is particularly pertinent for Papua New Guinea, given the linguistic diversity and the fact that people may be speaking, the sort of the lingua franca being Talk Pisin. People may speak that as a 5th or 6th language, and they may, Talk Pisin doesn't easily lend itself to being a written language, just because it creates so many more words, and the words are bigger. And so when you have a text limitation, this creates some challenges. And so, even just if we agreed that Talk Pisin was going to be the language that everyone used, there are challenges there. And also with these, with digital financial services, we also have the challenge of these pretty abstract terms that we use without thinking. So cash transfer, insurance, other issues like remittance, international remittance. When you work amongst when you work in this field, you get very, very used to throwing these words about, but they don't necessarily make a lot of sense to someone who is not a native speaker of English, and they're quite technical words. So we need to be really cognizant of the kind of language we use. Now, numeracy was our second enabler that we dug into, and we talked about 3 different types of numeracy. So sensory numeracy, so where we acknowledge that there are 3 people walking towards us, and then there's spoken code. So we may use the word 3 in a sentence, learn to count, learn to make mental calculations like the amount of change we might expect from a 100 kina note, we can understand that if we give 80 kina, we'll get 20 kina back. And then finally, there is the written code, and this is the trickiest part of it. And this is sometimes academics refer to this as arithmetic notation. So learning to write the 3 or the 1,000 or the 2,000, and then being able to understand the placing of different digits. So it's easy. It might be easy to write 3,000, but if you were asked to write 3,623, and then to pay someone $25 from that, how are you going? Are they able to make that calculation? Are they able to translate that calculation onto a digital tool? So if you don't have these 3 types of numeracy, you could be considered enumerate for the purposes of financial inclusion. So this is a reasonably important differentiation. We then looked at social norms. So social norms are the community standards of how people should and do behave. So it's not necessarily how they absolutely should, it's how the community demands that they behave in certain ways. So social norms can significantly influence women's digital financial literacy. They can constrain them if you're not able to, perhaps if you're not able to leave your village to get mobile signal to make a payment, then that is an example of a social norm that constrains you. But they can also be enabling. So perhaps if there is a tendency to go to town to pay your electricity bill in person, you might use the time waiting in line to learn about something, learn about a new financial service or a financial tool, because you're able to go and pay the electricity. So we really need to understand, whether within these enablers, what is constraining and what is really enabling people to improve their digital financial literacy. Another key piece is design, and from a provider perspective, design encompasses all of the choices that the providers themselves, so your MyBanks or your Digicels or your Bank of the South Pacific, are making with regard to the products and services that they're offering to customers. So when we have a new product, who is being offered that product or service, and who is being excluded from that offering. Now, this might not be something that was purposeful, but if it's a service that only runs on a smartphone, and we know that smartphone penetration is really limited and outside of Port Moresby, then we are actually designing a non-inclusive product. What is being offered to customers, and how is this being determined? So how is the research feeding into this? And what communications channels or delivery methods or technologies are being used to deliver this? Because if it's, as I say, if it's only being delivered on a particular platform and that platform is not so widely available, that creates real challenges. We also have consumer awareness, again, which is quite similar to design. So, what is the hook for the user? And I think this is a really important one, because if you can't understand how a product or service is going to change your life, how it's going to improve your life, there is little incentive to change your behavior. And if you're thinking about sort of saying, I have seen mobile money advertisements that say things like, get mobile money, become an economically empowered woman. And this is incredibly abstract. I mean, what does that even mean? Whereas if you were to say to someone, if you got mobile money, you could save, X kina a month, and it would take away the burden when school fees are due. So you can use this to put money away and save it for a very specific, specific goal. So it's really, it's very research dependent. We need to understand what are the wants and needs and struggles of people in Papua New Guinea. How are they interacting with digital financial services, and how can we make them better aware of the ways in which these services can improve their lives? Can we go to the next slide, Roberta? So in Papua New Guinea, there are some really particular challenges to digital financial literacy. First of all, there's a gender gap, both in a digital gender gap, so both in the women's access to mobile phones. We don't have a huge amount of new data. The last data was collected in 2013, the last data that is commonly known. And then we also have a gender gap in terms of financial inclusion. So women are less likely to have a bank account than men. And this is quite pronounced across the Pacific, but particularly in Papua New Guinea. It's around, I believe the gender gap for Papua New Guinea and financial services is around 30%. There's also some issues around women's empowerment. So specifically, this is regarding gender issues. One of the ways in which you become literate or familiar with mobile phone services and mobile money is by playing with your phone and by using your phone. And so it's when you're not able to have a phone, and surveys by UNCDF and the GSMA have revealed that one of the primary reasons that women don't own mobile phones is that they fear upsetting their partners. Their partners don't want them to have a mobile phone, and they don't want to upset the balance of power. So, if you can't use it, you can't sort of become fluent at it, and you can't sort of see the value. So it's really a bit, it's a cycle there. Finally, the Papua New Guinea's, or second to final, Papua New Guinea's very challenging topography and access is a real barrier, because if you have a mobile phone, if you want to use digital financial services, you need both access to a electricity source to charge your phone and access to coverage to send the payment or to access the mobile phone network. And if you don't have this in your village, or if you have to travel a long way to get it, this really limits the business case to becoming digitally financially literate. And this is, again, the business case is both at an individual level, where we're talking about changing behaviors, but also at a service provider level, because it is a very, very expensive operation to go and to teach a community about a financial service, given the access, given the and topography, given the huge linguistic challenges. It's not a challenge that can be scaled. I think you can look at certain components of what has worked in urban PNG and look at how that might play out in rural PNG, but you can't treat them as the same piece. So these challenges are multi-layered, and they sort of compound each other. Can we go to the next slide, Roberta? So there are several approaches to improving digital financial literacy that have really struck me as being successful, or at least very resonant and useful to people who are trying to learn about digital financial services. And there are a couple here by My Bank. I think that My Bank has done a lot of work in the marketplaces, which is very, very low tech, and it involves putting down a tarpaulin and really creating a space for people from the market, specifically women, to come and learn about mobile money and to show up at the same time every day or every other day, so that people can come and sit at a time that suits them, so they can maybe leave their market stall for 15, 20 minutes and come and ask questions. They can see who else is in the group. They can, ask their peers for advice, and then they can return to their stalls and maybe come back 2 days later after they've had time to think about it. So much of the way in which development practices really teach digital financial literacy is based on a very kind of structured classroom learning technique. Like you put people through a 6-week training. Now, this doesn't necessarily fit into their lives or their learning preferences at all. So I think that this idea of coming to the market and working on the timeline and the cultural comfort levels of the people that they are trying to reach is fantastic. I also know the GSMA has done quite a bit of work several years ago now, but using multimedia learning, so looking at a radio drama around digital financial literacy, where they were really trying to improve people's awareness of services. So it was a three-part radio drama that talked about, was in Talk Pigeon, and it was on ABC. At the same time, there were large kind of how to make a mobile money transfer posters that went step by step through, I believe, My Bank and Sell Money at the time's process for making a peer-to-peer transaction, how to use it, how to make to create a text message, why sometimes a text message might be better than a call, etc. So that's all still available. Those resources on the GSMA website. Community learning, and I thought this was quite amazing in its simplicity. When you have a group of people, such as women in PNG, who are not necessarily they don't necessarily have the same volume of voice as men, it's imperative that you really, if you want to learn, you need to feel worthy of learning and empowered. And again, My Bank did some very, very interesting work, which was with women, I believe in the churches, which was using hymns. So they would bring women together and they would sing church hymns together. And, this is something that they were good at, they enjoyed doing, and they were very competent in. And then so they would sing these hymns together, and then they would be asked to create a song about their financial behaviors and their financial wants and needs. And so you're reinforcing this, here is a skill that you're already good at, and now we're going to add something new and segue that into this new skill set. And finally, heuristics and nudges. There are some very interesting examples here of, doing things like, in terms of the nudges, I know that ADB has recently been doing some sort of mass financial literacy training around the country. And by bringing banks out to the end of the training, so BSP, My Bank, etc., I know have been a part of it, and actually bringing the bank to the people, that takes away one hurdle that they might have had they just had the training themselves and then been told to go to town and open an account when they wanted. Another example that I was impressed with is, one of the barriers is around digital identity. And I believe, Women's Microbank have been using biometrics at their trainings or within their community groups. And again, this is removing a barrier. And so you're making it that much more doable that someone might adopt mobile money and use it. I realize I'm coming to time, but I just wanted to, I think that there is a huge role in the future for heuristics to play. Heuristics takes the onus off the learner, and it puts it back on the teacher or the entity that is trying to teach. It's a lot more intensive for the teacher, but it really works on this less is more concept, where you're not trying to overload someone, you're trying to give them key sort of key take, or it's almost like a cheat sheet, techniques in which they can fast track their sort of uptake of new and positive behaviours around digital financial literacy. So I'll stop there, but there are some, if you want to get in touch, obviously Albert and Milate have my email address, and all of our details are there. I would invite you to join Finequity. I'm very, very happy to talk about digital finance and Papua New Guinea at any point. Thanks so much.
Thank you, Catherine. That was a very insightful presentation, again, on digital literacy and why it's important to support the digital financial services ecosystem. I think a key takeaway from this as well is the research bit. When we're talking about, other mobile money service providers and all that, targeting specific customer segments to provide that value or drive that inclusivity. Thank you, Catherine. Now moving to our final presenter for today, I would like to introduce to you all Tony Willenberg. Tony is a computer scientist by training and holds an advanced degree in both applied finance and computer science. He has worked in 21 countries and contributed to the design and sometimes redesign of government-scale computing environments, as well as authorizing national regulations and policies in ICT. So Mr. Willenberg is a consultant with Neo Capita Security, and will be sharing current practices and lessons relevant for PNG under digital ID. So Tony, welcome.
Thank you. Thank you, Roberta. Can everyone hear me okay? I'm coming through clear? Okay.
I can hear you fine, Tony.
Thanks, Callum. Okay, so what I'd like to take you through in the next 15 minutes is just a short story in 3 parts. The first part is to look at what we currently know and experience with digital identity in Papua New Guinea. The second part, we'll look at how other countries and other experiences can be brought to bear on the challenge of providing digital identification for citizens here in Papua New Guinea. And I'll finish off in the last section just going through some of the key structural links that UTRU has participated in creating to make sure that we've got a sound, stable, and customer-centric environment for digital identity in the country. I want to emphasize that UTRU is not necessarily about a system or a particular technology platform. It's equally about a set of rules and interoperability and open standards that allow digital identity to flourish for the purposes of financial inclusion and preparing PNG to move more business and governance methods online. So let's open up with what we know about PNG today and digital identity in general. At the very essence of digital identity, what we're trying to solve is the problem of trust. In the real world, as we get to know each other more, we trust each other more. But when you move into the online space where you can't necessarily see the other parties in the transaction, trust becomes critical. What we have is in most institutions that need to identify their customers, what they do is they ask certain questions about their biography to get that information and then build up a kind of an image in their mind about how that customer is likely to behave. And equally so, customers also identify themselves to businesses in order to be trusted. For example, to be trusted that they'll pay their hotel bill or they'll make payment for some goods they've received. Government also needs to use an identity of citizens to be able to know to whom they're providing service and to provide it to the correct citizens. The bottom line is that without trust, we have an inability to account for the risk in a transaction, and so transactions naturally become more risky. This applies to transactions with the government, transactions between citizens, and transactions between citizens and institutions, even financial institutions. So what we're trying to do is we're trying to by using digital identification, we're trying to trust each other so that we can take the risk out of transactions and make them cheaper. If all of those transactions come with a greater degree of trust, prices will fall for transactions where there's risk, because the digital identification provides recourse to both parties in the transaction, provides them a way to be able to resolve any problems because they know who each other are. Sometimes what we have in the economy are risks that are priced explicitly. So for example, you might have a situation where if someone is identified to a certain level, they will get certain services that you couldn't get from an institution if you weren't identified. We can think of it in the financial institution situation. You might have a tiered approach to KYC, where you can do only basic transactions when you start out, but as you are better identified, you can do more. So currently in Papua New Guinea and countries where we don't have a digital identity framework, businesses write off millions of dollars each year in uncollected debts and fraud-related transactions. So to compensate, we often have to expend a lot of productivity chasing the wrong identities or chasing the correct identities, but because of the inability to get all the detail, it takes us longer. So digital identity is really about solving this problem where we can get rid of that wasted productivity, that wasted effort. We can reduce the risk in transactions so prices can come down. And it also provides us a way of understanding the behavior of customers in transactions uniquely. For example, in Nigeria, they had a situation where when they introduced digital identification, they could drop about 43,000 government employees that were found to be, be removed because they were purely duplicates, each of them receiving salaries, but of course, not for the right reasons. So what we want to do is look at other parts of the economy. It's not just the government payroll. For example, bank customers can have multiple accounts held at different institutions. Even though they're the same person, they may have different names. So you have essentially financial risk or systemic risk in the banking system if you cannot uniquely identify customers. We know that we have right now a global push for banks to identify customers to avoid that kind of risk. But this is within an institution, but even within citizens, among citizens, there are problems where one citizen can't trust another because there's really no recourse other than some of the paper-based government documents that are provided with which you can prove your identity. So we have a situation, for example, where someone's buying and selling some produce. Unless those people know each other well, there's risk in that transaction. Another example of sort of practices or problems with identity today is the credit histories that are collected by financial institutions. We know for a fact that there are multiple credit histories attached to the same person, but with different names. So resolving those would give a clearer picture and again, take risk out of the economy and financial institution transactions. At the moment though, identity, it costs time and money to go and get one. And if it's easy to get, let's say it is something a citizen can obtain, say for example, a driver's license or a passport, then the applicability of that, the ability to have that document accepted widely is still not there. A better example might be a customer who identifies themselves in a bank can't reuse that identity to be able to switch banks or to be able to open another account at an insurance provider or a place for retirement savings. Each of these institutions are doing their best to identify the customer, but unfortunately the customer is bearing the price and the cost of having to repeatedly identify themselves over and over again from institution to institution. Secondly, that cost, you can't leverage it because no institution accepts anyone else's effort and investment in identifying that customer. So unfortunately, the citizen unfortunately bears the burden of our inability to cooperate in the identity market. So what UTRU is about is really changing that behavior so that we have an ability to have one identity used and obtained once but used many times. So sometimes you'll hear issuers of identity in Papua New Guinea, they'll explain that the cost to get or to issue the ID is very low. I've heard numbers as low as 30 odd kina. The problem is that without accounting for the citizen's cost, the travel they have to do to go and get it, the time they wait in a queue, the paper documentation they need to provide, without accounting for that, we're kind of missing the point of it. It's good for the supply side, for the institution, but not good for the customer. And then once they do get that ID, there's insufficient trust in the economy to be able to reuse it over and over again. Even the gold standard in PNG, which is our passport, does not benefit from the improvements in digital security that are now available. So, for example, chip-based passports are not here yet. So what's happened is we've got each institution trying to do their very best to identify the customer, and unintentionally they've erected barriers that really costs the customer and overall costs the PNG economy. So let's look at, that's kind of a description of what we can probably all relate to, maybe pieces of that we can relate to individually, but collectively these problems are affecting how the it's okay, I can control the slides from here, thanks. If you don't mind, I'll switch the slides. We've created this environment, each institution working individually. So what UTRU has proposed is a different way to work. A way to work where we define some of the basic rules about how digital identity is supposed to operate, and then share those rules amongst institutions that are interested in being part of that open framework, to then leverage the investment made by every citizen in getting an ID, to leverage that so it can be retrusted at other institutions. They refer to this kind of system as a trust framework. And the trust framework is sort of a fancy name for really just a set of rules that we can all agree upon are required to conduct a transaction amongst a set group of members. So in this case, we're talking about determining how a digital identity is issued, agreement on the basic eKYC attributes that will be collected, understanding the risks associated with each level of identity, and kind of documenting that in an open document that everyone can use or reuse in their own institution. So this, how it would be implemented is we want to see customers request an identity from UTRU and then use that identity as either an attribute in their systems or as the core identifier. UTRU is not interested in all the detailed attributes about a person. What they're trying to do is create a single unique ID so that can be leveraged in the economy. Now, other countries have been down this path before, so that's fortunate for us because we can look to see what they've done well and not so well and kind of adapt for PNG, a set of things that make sense, leaving behind some of the mistakes that have been made in other places. So UTRU is really two pieces. It's this set of rules that are documented in an open document called the trust framework, and then it's an actual digital platform that provides safe storage, safe access, and services to make sure that the identity can be relied upon. UTRU only benefits if the trust framework is adopted widely. So if each institution decides to run their own race and have an identity service of their own, this doesn't help the overall ecosystem. What we want to encourage is an open conversation about digital ID where we're not all repeating the same internal costs and investments in securing identity data. We're not forcing the customer to keep re-identifying themselves at every institution they go to. And we see cooperation between both public and private sector organizations to introduce this kind of efficiency for the customer, for the citizen. So the job of UTRU is only kind of singular. We have to earn the trust of every institution that joins by declaring how we implement both the platform and the rules. So by that I mean we do not use secrecy to create security. We use public algorithms that are published, documented in the not only research literature, but are used currently by secure digital systems and services. We earn that trust through declaring what our objectives are publicly so that we can be held accountable to those principles. We invite broad and open ownership of not only the business, because we need a business to make it sustainable, but we also invite broad and open ownership of that conversation around what the rules are for how data is gathered, protected, shared, accessed. We want to encourage open standards because we can't be interoperable if we erect our own silo in the industry and become kind of a gatekeeper for identity. That doesn't work either. There are countries where that has been done, and of course, mistrust eventually creeps in, and that undermines the whole functioning of the ecosystem. So we, through UTRU, we want to adopt open standards for how biometrics are collected, how they're protected, and we'll give you some examples of some of the things that we're doing, which are very different from what is done today with citizen data, and particularly identity data and the data related to that identity. So we do qualify who joins the scheme, and that's only to make sure that there's a certain quality of procedure and data that is upheld by that institution. But the idea is UTRU is federated, which means that anyone can join and anyone can issue and use IDs. It's not controlled at a single point or a single central point. So recently, UTRU has raised capital in the domestic market. We've raised money for our operations, and as a result of that new shareholdership, we will start operation with about 300 branches or 300 physical locations around the country where people can get assistance to get a digital ID. But also we have the availability of customer data with their consent, of course, that numbers about 2 million citizens from various parts of the economy that where they can sort of get a jump start for getting their digital ID because they already hold a trusted account with one of the institutions who now own UTRU. So the idea is that access is open, so that, but it is qualified, and we do make sure it's transparent, so we know who's in that ecosystem and who's playing by the rules and who's not part of the ecosystem. So earlier I mentioned that we're doing some things that will be different from how identity is managed and how some of the identity products that you might have seen today, how we will differ. And I'd like to focus on the second bullet point because it's critical for people to have a sort of a lay explanation of these technologies so that they understand the impact for them. So one of the things that we use, sort of one of our principles, is we ensure security without being secret. In other words, we use publicly available algorithms to make sure that the data that is related to someone's identity can never actually be read by anyone other than the citizen who owns the data and the institution they're giving consent to look at it. So it's not a case where the UTRU Bureau will have identities on the screen where we can scroll through them and look at people's addresses and dates of birth and other personal details. That will never be the case because we use cryptography to make sure that the data is encrypted and not even visible. We use things like distribution to make sure the data is not located in a single place because that prevents any kind of hacking target. It also makes sure that we've got redundancy built in to how digital data is stored. We use methods like tokenization, which means that we use a special cryptographic algorithm to turn all the personal data into a number, and only that number is stored. So even if you did manage to look at that data, all you'd see is a number rather than the underlying private details of the citizen. And we use some other techniques, including publishing how we govern the platform and use our services and provide those services. We publish that internal governance standard as well, so people know what we're doing within the walls of the Bureau. But the main thing to remember is that the customer's data about identity is private, and we don't collect or expect that the data is related to the things they use their identity for. It's mainly collecting and holding just that core identifier that's used by others in the economy to link their relevant data, the data they're permitted to hold for the customer, to link that data to the U-True identifier. There's one other thing I'd like to sort of express here to explain while we're on this slide, and that is what we're calling zero knowledge proofs, or an ability for a citizen to be able to prove something about their identity without having to reveal the information. So at first that sounds like an impossible task, but if I could just explain by example. So let's say you've got a situation where a young lady's going home at night, she is pulled over by a police officer. The police officer says, "Can I see your driver's license?" At that point, in that scenario, what is happening is a paper-based government-issued document is revealing a photograph, full name, address, current address details, date of birth, and a lot of personal information, basically, about that citizen. That's what we call, that's essentially a proving of one's ID to the police officer, but that has unintentionally revealed all of that personal data about the citizen. With U-True, we would adopt a mandate to use things called zero knowledge proofs, where the system would allow, say, a police officer to scan a machine-readable barcode or some kind of expression of ID without looking at the details, and the system would simply respond by giving them an answer, a yes, no, as to whether the person is permitted to drive, a yes, no answer as to whether the person's over 18 years of age, and not revealing the underlying data that is attached to the ID. So in other jurisdictions, other countries, zero knowledge proofs are expected. They're mandated in some cases, like, for example, within Austria and some parts of the EU. What that does is protects the citizen's identity data, but lets the police officer, in this example, know whether the person that they've just scanned the ID of, whether that person is permitted to drive the vehicle they're driving. And there's plenty of examples of that. You know, someone who has to prove whether they've got a bank account and a current balance. They don't need to reveal the users of the U2 identity platform don't have to necessarily reveal the balance to someone who's checking, but a customer may give someone consent to say, yes, you can check on my balance. It's okay, I can change the slides if that's okay with you, please. The idea is to use the data without revealing it and only with the consent of the customer. So U-True will be designed on that basis. The other idea is that two other techniques that are used in other places that will bring to U-True are what we call sector-specific identifiers. And what this means is that no citizen or no user of the identity platform can have their data at one institution joined to data from another institution. So I'll give you an example. Let's say the customer presented their ID to a hospital check-in counter, and then at some point in time later, presented that ID to the motor vehicle driver's license, the RTA. At no point in time should the same identifier for the citizen, for that one citizen, be identical in two sectoral databases, because that then exposes the citizen for that data to be joined. So we use a technique called sector-specific identities, which have been used for about 3 decades in some other jurisdictions in Europe, which prevents the customer's identity being profiled. Only if the government department or institution asks permission of the customer to do that join. For example, if the customer was to opt in and say, I'd like to have that ability because maybe the government can tell me when there's a special health program grant, if I check in for a certain health condition, maybe the government can help me by telling me when there's some financial support available. Only with the customer's consent to do that match should that be permitted. And finally, we want to look at things like the right to be forgotten. So there has got to be a way, and again, I think Mr. Cracknell touched on this earlier, that privacy and the protection of data driven by the EU's GDPR, which are the body of regulations for the general protection of data, are really driving much of this sort of shift in thinking about identity and how identity is represented in systems and to customers. So the right to be forgotten, we will adopt as a way of doing business for U2. So if they choose at one point to get rid of their ID, they can simply erase it and have the assurance that it will be forgotten. U2 will be a digital ID that's able to be fully digitally onboarded. And in our next section, I'll cover up some of the global and regional and national regulations and legislation that has changed to now permit for the first time this kind of digital onboarding, both with assistance from someone like an agent or without assistance, being fully online and digital in nature. I think also, I think Katie's comment earlier was also important for an important link to how U2 will express the credential. How U2 will give customers a credential and a way of expressing their ID is not fixed. We will integrate with a range of different ways of carrying an ID. So in India, for example, the Aadhaar identity system offers an option for the citizen to just simply carry their identity in the cloud under their control. But then some jurisdictions now allow phone apps and electronic SIMs, secure enclaves within a device to carry the credential. In yet other places, you can use a simple token, maybe a smartphone or even a dumb phone, maybe that's not appropriate, and a simple token or a small digital object that they can carry may be the way the credential is expressed. So U2 is open in that regard too, in that we don't force a particular technology to be adopted on day one. It's something that we work with the scheme members to determine. U2 also expects that there'll be reviews and audits regularly on time, and that we will publish that data so you can see which scheme members are in the scheme, how many identities are issued, where those identities are being issued, how they're being used, and all those statistics need to be published and available online and regularly. We don't necessarily need to work with one group within society. We can quite easily work with either public-private or civil society groups. But the key is open standards to promote interoperability, and the systems that are being brought before the consortium to look at, to consider before they acquire a platform. I must express that, I must sort of qualify that these are systems that are what we call state scale. These are systems used by groups like the German Border Security, the Australian Customs and Immigration, New Zealand's Central Bank. These are systems that are, we call them state scale because they already have, in some cases, they have billions of identities operating on the platform, which means that we don't have to, there's two benefits to that. Number one is we don't have to think about the testing and the qualification of a brand new piece of technology. These are very well-established platforms. Secondly, they scale, and they scale to the size of a country if need be, which is something that is important if we're to have one unique identity framework to support economic growth and financial inclusion into the future, into the next decades. All of the system providers, currently we've worked with shortlisted about 6 providers, and these are global providers, as I mentioned some of their customers before. These providers all work to open standards, which means if we choose to leave a provider and move the data to another platform, the data is, again, it's secure, but without the secrecy. So all the data is available and accessible and portable, but without the need to be locked in. One of the things we can't do is have a system where we're beholden to the vendor for the technology platform. We need to be able to shift if our service levels are not being met. So let me finish by explaining some of the things that we've done to make sure that the structural placement of U-True in the economy is both for the long term and helps to develop both the regulatory and the legislative environment to be compatible with, so that we're compatible with digital ID's sort of good practices and best practices. The first instrument is the US Treasury's Financial Crimes Enforcement Network, or FinCEN. They formed the Financial Action Task Force, which is a group of about 180 countries that provide guidelines and standards for central banks to regulate how they identify customers in their banking system. So one of the things that U-True has done is we've worked very closely with the central bank to make sure that the revisions being done to the current customer due diligence standards are in line with these international guidelines. And the most recent guidelines are the Digital Identification Guidelines published in February of this year. Secondly, we're making sure that the regulations working with the central bank, while they have provision for digital identity and digital onboarding, they also provide a sequenced approach so that the banking system in Papua New Guinea can acknowledge what we're doing in digital identification and show that we've got a progression to becoming more digitally capable so that we pass our APG neutral evaluations. These are evaluations done by the regional chapter of the Financial Action Task Force that helps the Bank of Papua New Guinea know what, where reform is required and how to stage and sequence that reform. So we want to be part of that process, and we have been to date, which has been very helpful for both us to know where we can help support the BPNG, but conversely for the BPNG to guide us to make sure that we are always compliant with what the central bank needs to regulate. Regionally, we have a number of instruments, two particular instruments which we've tried to coordinate with and tried to recognize in the way we've planned and designed U-True. The first instrument is, of course, the APEC Business Advisory Council report to finance ministers, where we've explained that we are promoting this open trust framework to meet the need for a regional cooperation and integration. In other words, we help to provide digital identity services that can be used across the region only if the trust framework promotes and it sticks to interoperable standards, has certain requirements for consumer privacy and data protection, and those are maintained within the trust framework. The second instrument is the regional consortium that's now forming, driven by the Reserve Bank of Australia and Reserve Bank of New Zealand, for a harmonized approach to digital identity, particularly for the purposes of sharing eKYC or KYC data. So as correspondent banking relationships and cross-border payments are increasingly and largely digital, there has to be a harmonized way in the region for us to understand identity. So we're participating in that process to make sure that we have some of the international good practices on digital identification, making sure some of those are brought to the table when we're thinking about how reserve banks share that data in the region. Just a couple more slides. I mentioned earlier that U-True is working with the central bank. We've had a 2-year relationship. U-True was born out of a central bank initiative. So we come from the central bank in terms of the concept behind it. We're working with the BPNG to make sure that the provisions in the next round of BPS 253 will provide financial institutions and other institutions three key deliverables. One, there'll be an ability to onboard customers, albeit at a very low level of assurance and a low level of trust, the ability to onboard in the regulations, onboard citizens electronically using certain digital features. These cover three main areas: biometrics, biographics, and behavioral activity of the customer. We're working closely with FASU, the BPNG, and some others to make sure that these provisions are still in line with the international standards that have been put in place now, as well as with an eye on what we want to develop in the region. Finally, there's three pieces of national legislation that we've provided some guidance on, including the Electronic Transactions Act with the Department of Justice, the most soon-to-be published Digital Transformation Policy of 2020 by the Department of Communications and IT, and also the Digital Transformation Bill. So what we've done is we've adopted these open principles, these published sort of guidelines, and we've brought those before the policy making bodies responsible for these instruments to make sure that we've got some good compatibility going forward, and that U-True from day one will be structurally integrated into the current and some upcoming legislation in PNG. So that's probably a lot to go over, but in summary, we really have a set of practices in PNG that we need to look at how we cooperate and coordinate if we're going to be effective. Secondly, the kind of things that we can learn from other jurisdictions are very subtle and they're detailed, and they do require kind of a sort of a technical integration into the way we think about ID. But from those lessons, we can learn a lot and save a lot of money and time. We can look to some of the best jurisdictions for the things they do, as well as some of our neighboring jurisdictions to help with regional integration and cooperation. And finally, we've had a number of intersection points over the last 12 months where U-True has helped to craft and support the development of digital identification in some local regulations and legislation, which will come to pass shortly. We're fully funded now, and we're intending to start making identities available from the 1st of January next year. And the business is, as it's a private company now, we've approached the central bank to be an observer on our board, and that discussion is happening. So although we're a private company that was mainly done for the purposes of financial sustainability, the trust framework part of our business is the way that we keep everything open and make sure we have a sort of an industry-wide, economy-wide approach to digital identity. Thanks for your attention. If there's any questions, I'm happy to take them now, or we can take them later at the email address up on the screen.
Thank you, Tony. That was a very insightful presentation. I think straight after this, we have the questions and answers. If anyone has any other questions and answers or a Q&A coming through, participants, please send through your questions. Now, just to give a summary for the overall panel discussion before I ask one question that's come through. Thank you to Mr. Cracknell. We've heard more about the ecosystem, so what's practical in parts of Africa and Asia, and how you're highlighting what can work in Papua New Guinea, as well as giving an overview of the fintechs and neon banks right across globally. Continuing on with the national payment switch, so we heard a lot more from Ms. Lyon with reps and how that's important part of the ecosystem as well, in terms of payment connectivity right across all key players in our financial service ecosystem. Now, moving on, thirdly, what is the impact of the Coral Sea cable, the importance of data and connectivity within the ecosystem as well, a good presentation that was provided by Dataco, and of course with our first digital regulatory sandbox in the Pacific that was given by Calum, a very good insightful presentation as well, just to give a little bit of review so participants can ask questions along these areas. Now finally, even moving towards understanding digital identity, that is an important part in ensuring that everyone can play or plug and play into the financial service ecosystem. And, last and foremost, the financial literacy aspects. If we don't understand financial literacy, how do we take part in the actual digital platforms for financial transactions? So just going through an overview of the questions that have come through, we do have one that's specific for Calum around the sandbox. Do you see the sandbox contributing to redeveloping regulations, issues, and new guidelines in a responsive manner in other parts of the world?
I don't know about in other parts of the world, because we have, as I said, we've tried to design something that is highly interoperable. We have learned from other jurisdictions about how to craft our sandbox, and we've taken lessons learned from them, particularly places like the Central Bank of the Philippines and Bank Negara and the Monetary Authority of Singapore. We are very open to sharing all our learnings with other central banks and institutions, and we always have been because they have been so generous to us. So if there was things that could be learned from our experiences, then I'm sure we would be more happy to share with them.
Sorry, Callum, the question wasn't quite asked properly. I said in other parts of the world, this is an area where things are evolving much more slowly. The evolution from sandboxes into learning for changing regulation. It's not about how you can change, it's about how we're learning in PNG through the sandbox to change regulations. Because I've seen in, let's say in Kenya, the work on digital finance and digital credit, nano credit, is leading into a need for new regulation. So it's how the sandbox is feeding into regulation.
Well, we haven't actually got through. We've got 5 applications going through the sandbox now, but they're all at very early stages. So we certainly haven't got to this point where we're evaluating the regulations at this stage. In fact, over the next couple of weeks, we're hoping to have a major session with all of the members of the evaluation committee to make sure everyone's on the same page in terms of when we get an application, what are the common steps that we need to, or the common themes we need to be looking for, like, have these people committed to it deploying in the next 9 months? Have these people given us sufficient information on their exit strategy? Have they given us sufficient information on how they're going to go about testing? Have they provided us with proof that the 50 people that they're going to be using in their customer test are aware that they are in a test? So if the question is, will we be able to revisit our regulations? We haven't got to that point. But as I've said, as the bank has always said, one of the subtleties of having a regulatory sandbox is it gives us an opportunity to test in the 21st century the viability of any given regulation. Remembering that some of these regulations were written by the Germans and the British. Whilst it is the very nature and essence of being a central banker is to be conservative, we're very lucky in the Central Bank of Papua New Guinea of having a very innovative governor and a group of deputy governor and assistant governors who are very supportive of this. I think if someone in the course of going through the sandbox was to point something out, I think they would be given good ear. I don't think it'd be a matter of, well, this is the way we do it. I would hope not. This is not the way we do it, so go away. In fact, a good example of that is the KYC things. We've identified that there are potentially some changes required in the current KYC legislation to enable digital identities to be collected. Because at the moment, the current KYC legislation, as we understand it, does not include the word digital. So we're not actually breaking any rules, but the rules don't say that it's actually acceptable, which is why AG Piddick, who's on the call, and his team are looking at that right now. It's a regulatory matter, not a technology matter.
Thank you so much.
Thank you. Are there any other questions from participants?
If I can just add one point, Roberta, on the regulation question. One thing that we did identify, and the World Economic Forum has been providing some input to the Electronic Transactions Act, which also extends into electronic payments. That's nice alongside the NFIS Act. But one of the areas that we did identify, and stuff in a workshop with them a couple weeks ago, was that looking at banking licensing, as David said, some of those things have been around for a long time, and whether there's some sort of a review needed, because looking at some of the information as well, that there aren't as many branches, typical business license models don't work. Does there need to be some sort of a license for a digital bank or something along those lines that would better facilitate some of the new entrants? So that conversation has happened elsewhere very recently.
Yep, thank you, Teresa. Anyone else? Okay, so there appears to be no other questions in our Q&A. So I'll now hand over back to Salia to address the forum.
Oh, thank you very much, Roberta. I think everybody can hear me as well, is it?
Yeah.
Yeah.
Hey, Salia.
And thank you very much for all the presenters. I think it was a very informative sessions that we had today. And we actually invite all of you to join tomorrow's session as well, which we will start at 9 o'clock with a statement by the Governor, Mr. Loy Bakani. So we expect all of you to come and join us for the webinar tomorrow morning at 9 o'clock. So thank you very much again for participants as well as the panelists. And we look forward to see you tomorrow. Thank you. Then we conclude the webinar now.
Thank you, Salia.
Thank you. Thank you, everyone.
Thank you.
Thank you, Roberta. Well done.
Thank you, Roberta. Thank you, Salia.